SBI and PNB. Of course, ICICI Bank is our top holding, and followed by Axis and of course HDFC. So I like select banks where you don't have asset quality problem. And in PSU banks, of course, there is no asset quality problem at all, but those with the operating leverage. So CD ratio below 75%. That permits you to lend, right, more than you gather deposits. Yeah. So in this environment, when deposit gathering is a challenge and liquidity is a challenge, in spite of RBI infusing so much money, the banks with lower CD ratios will always benefit.
How the tables have turned now.
Exactly.
In the last 10 years.
People say, right, history often repeats but doesn't rhyme this time around. People need to relook that with a fresh lens, because what is historically true for PSU banks may not be true this time.
No, and just that historical idea that bad books, corporate, corporates not paying back, asset quality, and today you have a completely different.
And the asset quality is improved quite significantly.
You see the profits of PSU banks, SBI 69,000 crore, PNB 17,000 crore. You see the PAT and the market caps.
So when CEA
and the balance sheet size and their market caps.
When Chief Economic Advisor says big profits raise hikes, I think SBI employees should be listening to this first. All right, we promised stocks. We promised stock before we went into the break from Sony and Kush. So let's start with that. Yes, Kush.
Just one quick update, on the Nifty. While the number of contracts, that are short on the Nifty is, I think, a little less. Sony was telling me about 1.7 lakh odd, and that's down from 3.3 lakh, 3.3 lakh contracts. The percentage short that FII still have is 88%, right? So that's something. So as we said, no news is good news. Any kind of, a positive impetus will actually kick in that short covering rally also, and hence the 23,800, 24,000 kind of levels on the Nifty. Now, as far as stocks go, I said I like to, trade or invest agnostic of the event, but, the stocks do have a flavor of the budget event. So Colgate-Palmolive, we've been discussing that. I think, in the recent past, Parag Bhai had also mentioned this, the stock had done rather well after that. It's seen a fair degree of correction, but now there is a base formation and a recovery in place where the stock's taken on the 20-day moving average on the back of good volumes. So from a near-term perspective also, 2900, 2980 are the targets, 2740 is where you place that stop loss. The second one is almost a consensus buy now, which is Maruti Suzuki. The stock's already seen a fair bit of revival, but the reason it turns into a call now for me is because for the last 15 odd sessions, the stock was resisting around the 200-day moving average. Yesterday, it broke above that, again on the back of good volumes. So this momentum could well continue for levels of 550 and 12,800, with 12,050 being the stop loss.
What about you, Sony?
So I'll have both on the buy picks. The first would be in NCC. Now NCC, purely on data points, yesterday I've seen very strong short covering. Somewhere to the tune of 6% is a short covering that we witnessed yesterday, and it has broken very well, very strongly above a 20 EMA mark on technical chart. So NCC remains a buy from current levels, and you can keep a stop loss of 246 for targets of 260 to 262. The second buy pick is from the financial space, which would be HDFC AMC, which has seen a very strong recovery from lower support levels of 3600, 3700. So one can actually buy in HDFC AMC at current price and on small declines up to 3900, keep a stop loss of 3800, and a strong target towards 4200 plus levels can be seen.
Okay, so quite a few stocks over there. This one, I just want to quickly go through what's buzzing in the pre-open session and the early minutes yet. But I would say that some of that budget push can be seen. IRB Infra, let's pull up IRB Infra for you. Capex announcements expected to come in. Agri push, look at a Deepak Nitrite this morning, look at a Gujarat Fluoro, that is being seen as well. A Godrej Agro, Suzlon has been on a tear. Through the last many days, continues to be. Vedant Fashion also comes to mind. Set of numbers seemed decent, and Vedant Fashion also in focus this morning, but Deepak Nitrite definitely moving there. Bajaj Finserv, again, good set of numbers. Remember, we went very, very quickly over the numbers this morning as we opened the show, but there are a good set of numbers. Bajaj Finserv among them. Punjab National Bank, let's pull up Punjab National Bank since we've spent so much time talking about it this morning and see what's happening over there. PNB also seems like it will perhaps have a good morning, at least the first few minutes. On the other hand, a Poonawalla FinCorp, again, impact of numbers. I want to see what's happening to an IndusInd Bank as well. Street seems disappointed, at least if you go by brokerage reports on IndusInd Bank, but the numbers looking decent. I mean, at least the stock looking okay in this first couple of minutes. Bandhan Bank is the other one that I want to pull up as well, and let's take a look at what's happening with Hero. Bandhan Bank about 5.5% down in the pre-open session. Hero not showing any action right now. So these are some of the plays that we will see. In terms of the budget play, Parag Bhai, how would you look at this? And we said briefly that yes, fertilizers will show some movement, but if you had to pick a theme, government capex push plus focus on strengthening the rural sector further, what would be the key pick of stocks?
So one point which is there, irrespective of the budget, just because of monsoon and all, rural consumption is picking up, right? So that is one of the theme which is irrespective of the budget. Even if second theme which I told you, and where I think government has done a wonderful job in my view, is PSU banks. They just cleaned up banks. The profits have shot up, and there is no intervention from government in terms of whom to lend or not to lend, and the full credit to government for completely turning around PSU banks. From budget perspective, I can come to that housing is a sector which should be pushed, and some sort of
affordable housing.
Some sort of tax deduction which we get on the interest paid on housing, that should be increased, because there is a need to incentivize housing buying, because housing actually is a counter cyclical thing. It pushes, it creates a lot of jobs, right? So it creates demand for cement, steel and various other allied sectors. So I think housing, apart from rural and middle class, of course, what we discussed, housing is one area which I am looking at very closely, where government, if they can do something on that and increase that tax deduction, I think it will be very useful.
And so how should you play housing therefore?
So basically, see, I'll tell you, I can talk about our portfolio. We have Awas Finance and LIC Housing in our portfolios to play this theme.
Right.
Because Awas is 15 lakh and below ticket size, with a credit cost of just 0.13 bips, guidance of 0.25%. So best asset quality and 20% growth kind of story. LIC Housing Finance is like PNB, trailing P is 6-7. So how can you go wrong in this kind of stocks? Even if suppose one result is bad, suppose if NII growth is disappointing in LIC Housing Finance.
And it was this quarter.
It was this quarter. So I am not so much worried. It's 6-7 P trailing P for a business where you are lending money for 7 years. So your 7 years earnings are in your pocket. So why to worry?
You looked at the numbers closely. What did you make of LIC Housing Finance?
Yeah, it was a tough quarter. This time around, margins have taken a bit of a knock.
Yeah.
Of course, some credit cost support was given to profit after tax, but outside of that, margin pressure is there.
So LIC Housing, IndusInd, Bandhan, you looked at IndusInd as well, looking on the weaker side, but IndusInd seems to be doing okay.
Yeah, seems to be doing okay in trade, but the commentary, Tamanna, seems to suggest that at least for another quarter or two, the pain will last. So especially within that MFI basket.
Okay, that's the shot. That's the money shot of the morning, right? Finance Minister Nirmala Sitharaman with the Bahi Khata. They're getting ready to go in and present the budget. That's the budget document. It's actually a tablet, but in the traditional Bahi Khata cover, going to present the budget, and we're all waiting to see what's going to be seen in it. The budget session officially began from yesterday as well. I saw someone did a piece of, this is her 8th budget as finance minister, and she also holds the record for the longest budget speech as well. I don't know if there anyone wants to come in on a betting pool on how long this budget will last, but that will be interesting to see.
The only reason why I think it could be long is simply because this is in a sense chance of laying out the vision for the next 5 years for PM Modi's 3rd term. I think there could be a lot of announcements around this. Considering the state of world affairs that we are in as well, you never know, that could be the case too. So
and no matter what, I believe that the devil will be in the detail. As always. So while
actually,
the speech...
Actually, not this time, Harsh.
I would disagree as well. Okay, but you tell us why first.
I always believe that there are a couple of surprises which do spring up as part of everything that you read.
But she doesn't do that. That used to happen for a while, where you wait for the budget document and then there is one booby trap that comes in on some tax that you didn't see. But what we have seen last few years is that the finance minister, all of the tough stuff as well, gets mentioned in the speech, largely speaking. No?
Yeah, and sorry.
Yeah, I mean, that's also because the tough stuff has been around individual taxation and slabs, and therefore that that warrants mandatory mention of sorts.
Nothing is mandatory. Nothing is mandatory. No, officially nothing is mandatory. The finance minister can actually just place the speech and say, this is the budget, thank you so much. It's part of the whole thing of setting the vision and giving sort of a message.
Yeah, but my only reason why I believe that this might not be too many is because I think the two most important numbers will have to be detailed out in the speech, which is the capex estimates for FY25 more than FY26 also, just to get a sense of what is it that they expect in the next couple of months, and taxation. The market dearly wants no changes to long-term, short-term, and I think both of those, which are the key numbers, will be laid out in the speech itself. So, I mean, yes, there could be individual surprises, but otherwise not so. But anyways, 908 done. Very quickly, some stocks. We need to talk stocks, right? Right now, the market is starting off. Some of the key pockets which have done really well in the last 3 or 4 days, right? And Kush Bora, I'll come to you very quickly on that. Suzlon, Inox Wind. Post Suzlon numbers and the commentary, they've gotten a new lease of life. Is there more here?
There seems to be, for sure, in the sense, there is a fresh lease of life. It's just that the volumes and the move already in the short term is quite exaggerated. So I would actually buy it on a dip if at all I get one, and that could be closer to the 55, 56 mark. For the last 2-3 sessions, the stock's been on an upper circuit yesterday as well. So I don't think that's an opportunity. Closer to 55 is perhaps your opportunity.
Okay, Parag Thakkar, very quickly. These wind energy companies, there will be some mention about energy transition for sure. We have an NDTV Profit exclusive, rooftop solar, etc. and stuff like that. But Suzlon, Inox Wind, Vari, etc. anything?
So basically, it is out of my circle of competence, so I will not comment on it, and they are not there in my portfolios also.
Okay.
I would like to see them to go through the cycle.
Okay, fair call, fair call. Okay, Sony, based on the pre-open session, for some of the things, like, I mean, is there a trade, for example? I know I'm coming back to IndusInd Bank quite often, but because it's not started off as badly, is the chart saying, or the position saying that, hey, we know the results are bad, it's discounted, we want to actually go long?
So maybe not, no, particularly not for this stock. Perhaps, I think it's just wise to wait it out. And if you want to still go on any banks, I think better would be to bet on HDFC Bank, which has shown a very strong data point, very strong rollovers of 96%. It's aggressive, and there's a possibility it can actually head again toward the 1800 level. So I think hold on to that stock would be better than getting into IndusInd Bank for now.
Sony, any views on a Suzlon or an Inox Wind?
So Suzlon on technical charts is decent, I would say, but I think as Kush has already mentioned that it's better to actually enter into a dip, and the dip would be somewhere towards the 4500 mark, 45 mark, and it's a positional dip. I think just hold on to that. You can accumulate in those levels, and from there again it comes back to the 60-65 is where you will have a decent profit to book out on. So I think it's better to just wait for the dip to come.
Yeah, and another interesting stock to see actually, if we have time, is Wockhardt, and we have an exclusive conversation with Dr. Havil Khorakiwala. We've not had the chance to play it out, but Wockhardt has been one which has been buzzing because of a new stock. All right, you're seeing live pictures right now from outside North Block. Is that the budget document? Yes, that's the budget document being brought in. I just love this shot. In those sacks, those budget documents being brought in, because of course they will be distributed physically to all the members of parliament as well. There it comes. So that whole process, just the whole process of budget making is also so fascinating. And while we look at it purely from the impact of financial markets, there's so much more to see. Look at how the pre-open session has ended. I think that's important to note as well. You're pretty much flat. You can expect perhaps not as bad an opening as the Nifty implied had put into place, but pretty much flat. The question right from here is, what is the positions that you can take before the speech comes in, so that you are not scrambling as you move forward? And I suppose that's the big one. What is the one top call, Kush, that you would give our viewers before we go into the pre-open session?
Gen irrigation, it's been consolidating near the 200-day moving average with some sort of a positive bias. I think that's the one that you can look at for targets of 75 and about 78 from a near-term perspective. And the stop loss comes in, as I said, at the 200-day moving average close to the 68 mark.
What about you, Sony?
Macrotech developers, I think that's a stock to look out for. Very strong correction, and it's giving you a good reversal from lower levels. It has actually given an option chain breakout above a 1200 mark. So as long as it defends 1200, possibility of it heading towards 1260 is quite possible.
Wow, well, those are some ideas to certainly work with for sure. We'll of course keep in mind, one is the top ideas that you do. Some of these ideas might be relevant till 11 a.m. for the trade as well. So please bear that in mind, because the budget might change things on a few sectors, if not the entire market at large. But 30 seconds left for what is a special trading session this time around on the budget day, which is a Saturday. Doesn't feel like a Saturday. As Kushbora was saying, TGIF didn't quite feel like TGIF yesterday. But the key thing is, viewers, that while the global markets are shut, will Indian markets make a large exaggerated move based on what the budget dishes out? Or will the budget be kind enough to not really make wholesale changes and be what it should be, which is that it is a statement of accounts? We'll get to know. But first, Trump tariffs take center stage for world markets last night. Are they impacting our markets this morning? That is the key thing as well to notice. Actually not, 1/3%. So not bad, you have to say, considering the fact that Dow didn't particularly have a great closing. Banks though, yet again, underperforming. Though actually it's very, very flat for almost everything. Nifty IT2, let's bring it up. Mid caps 0.5%, small caps, let's pull them up and see. Well, Nifty IT is flat. Small cap index, which had a rocking day yesterday, up another 0.5% yet again. They have all found their mojo. Get the heat map up on the screen very quickly and see what's moving around and what's not. ONGC, I thought the numbers were okay. We didn't discuss it enough. We'll talk about it now, but 3% lower. Hero MotoCorp to the resignations, not an exaggerated reaction, but down 2% for sure. Then a BPCL, Coal India, TCS, etc. But the newsmakers are these two here. Then on the gaining side, Sun Pharma 2.5%, Bharat Electricals about 1%, NTPC 1%, Apollo 1%, less than 1%. So that's peppered. But Tamanna, heartening to see. I mean, in terms of newsmakers, it's Sun Pharma on one side and ONGC and Hero MotoCorp on the other side. I dare say, I thought Hero would have an exaggerated reaction. It hasn't.
Yeah.
And I'm a bit surprised by ONGC's reaction for sure.
Yeah, ONGC seeing a bit of stress. BPCL joining in right now. So oil and gas, is it expected that nothing much for oil and gas in the budget? I'm not so sure. Nestle, after its huge run-up post results yesterday, is also seeing a bit of a downtick. Hero Moto seems to be stabilizing, though it is a bit of a shocker that the CEO steps down for personal reasons just a few days before the results have to be announced. So that's that. But let's pull up the broader markets for you very quickly. This morning of the budget special trading session, that's why we're up and about on a Saturday, 0.5% up for the mid-cap 150. Not bad at all. About 3/4% up on the Nifty small cap 250 as well. Let's pull up the sectoral index for you. It's not a big cheer on the street yet, but definitely not looking like any kind of fear or concern ahead of the budget at least. I mean, a Nifty small cap 250 being the top gainer on budget morning is not half bad. So are realty stocks. Are we expecting something for affordable housing? Perhaps we'll wait and watch. Energy stocks also not doing too badly. Oil and gas in a bit of a drag, but that's largely, I would say, between an ONGC and BPCL as well. Let's look at specific stocks this morning. IndusInd Bank, what is the impact of results? Optically, the results frankly don't look very good, but the street seems to be fairly positive on an IndusInd Bank. Let's look at a Bandhan as well. Coming off its gains really. Bandhan Bank about 0.5% down right now. Hero MotoCorp we spoke about because of the change in management, about 2% down this morning. But Punjab National Bank, pretty good numbers over there, and an upgrade from Motilal Oswal as well, completely flat, as is an LIC Housing. So results is not the focus today. Is budget the focus? Let's see. A clutch of fertilizer stocks. What are rail stocks doing? Fertilizer stocks up in the green. Deepak Fertilizer, Chambal Fertilizer. I wonder if we can pick up Deepak Nitrite as well. That would be interesting to see. Rail stocks, IRB Infra. Let's pull up some of these and see what's happening. Rail capex expected to go up. Yes, those engines are chugging this morning. Titagarh, Jupiter Wagons about 5% up. Tex Maco also about 2.5% up. IRB Infra, stock to watch, 6% up. Capex and big capex expected in that bucket. Then look out for a Larsen & Toubro as well. Look out for a BHEL, a whole host of stocks you should see. Suzlon, 5% up. Once again, that's on its own trip, frankly. Wari Energies, good numbers. Solar focus maybe coming in this morning. So these are some that we should look at as well. Harsh, I find it interesting, the focus all on budget and what positions you can set in the next hour and a half.
Absolutely, Tamanna. So, when you're looking at the way in which the market's moving, you're largely seeing capex plays and skewed more towards those which have been, where last couple of years we haven't seen sizable increases with regard to allocations. And I'd be curious to know from a technical perspective, Kush first, what do you make of some of these railway counters, 5% higher today? Is there a trade on either side on any of these? Because the move is strong.
So Harsh, I'm a bit skeptical and a little cautious on some of these names, and I think we've discussed this in the recent past, that the moves that they made, somewhere in the early of January hasn't sustained. You could very well say that it's in line with what the markets have done, but it's not been a sustained move. There's a lot of expectation that's already built into the price over the last 2 sessions, 3-4 sessions, including today as well. So if the announcements are there but not up to the mark or up to the market expectations, then I'm afraid these could give way. Purely technically speaking, something like a TexRail, a Tex Macro Rail, is actually doing very well. Had conquered its 20-day moving average, resisting around the 50-day moving average, but the volumes are fairly decent on this one. So that's the one that I have on my radar. Jupiter Wagons, after I think a howler of numbers, has actually corrected quite a bit, but then you're seeing a recovery underway. So while I remain optimistic, it is an optimism with a bit of caution. So cautiously optimistic on some of these names. Hope that the budget has enough and more for this momentum to continue on some of these names.
All right, big morning, big morning. First few minutes have looked pretty decent. Rahul Arora is joining in. He's CEO, Nirmal Bang, Institutional Equities. Rahul, very good morning to you. And interesting way to spend a Saturday, especially today. Would you say that the fact that the market has shown some amount of confidence, faith and optimism in what we'll hear in the next couple of hours is a good sign to start off with?
Morning, Tamanna. Thank you for having me on the show. I think it was quite a salute going into the budget, right, yesterday. And I think, corporate earnings probably had a lot to do with it. But I think no negative news will be positive news. The market has seen a reasonable correction. I think stocks have fallen 2x or 3x of what the actual market percentage fall is. So I think, I don't think there's too much room for tinkering. I think, most of the numbers are consensus. From a market borrowing perspective, 14 and 11 lakh crores are a gross and net, 4.5% fiscal deficit. We're expecting about a 10% growth in capex. Not too much more than that, I think. Even on the taxation front, it is pretty much personal income taxes that are driving tax growth. So I don't think there's too much of a tinkering that can be done there, because the growth that you're seeing of 10-12% in direct taxes is not coming that much from corporate taxes or anything else so much as it is from individual income taxes. So hopefully maybe at the bottom of the pyramid, Tamanna, which is something that has been probably spoken about ad nauseum, because if you even look at the consumer companies' results, even this quarter they're struggling. There's no question. And the only reason you keep talking about tax breaks or doing something at the bottom of the pyramid is to revive consumption. So I think they'll keep doing what they are on the manufacturing side of the economy. The good part is that the defense companies so far have delivered on earnings. The EMS companies as well have delivered. There's been a lot of focus on PLI there. And valuations in both these sectors have become reasonable. So I think from a sectoral perspective, I'd be looking at consumer, EMS and defense from this budget. But I think on the broad arithmetic, a 10-12% tax growth, 4.5% fiscal deficit, and probably yields inching closer to 6.5% as we go along. That should probably be the summation of the budget. Hopefully nothing negative. We'll digest this and move back to corporate earnings on Monday.
Rahul, good morning. And you may or may not be able to see, but the studio out here is raising a toast to your birthday today. So many, many happy returns of the day. Have a great one. And may the FM give you a birthday gift as well.
Thank you so much, Neeraj Bhai. I think my biggest gift over the last many years has been having friends and brothers like you who have, that we wish for each other's good health, success and prosperity. And that means more to me than anything else. So thank you so much for remembering and acknowledging it on national TV, Neeraj. Really appreciate it.
Yeah, Rahul, we're waiting for the birthday cake in office. Now that you have not
Tamanna, I would have personally bought it, but the BKC traffic is so miserable these days that getting in and out would be half the birthday spent. But I will have one sent across soon enough. I promise you that.
We'll have the virtual cake on your behalf.
Yeah, but before I ask my question, Kush, you want to ask something too?
Rahul, first up, a very happy birthday. See, a lot of us market participants have these superstitions, right? So, do you have one where मेरे birthday पे market ऊपर जाता है और मेरे birthday पे market नीचे जाता है? Do you have one of those? I'm keen to listen if you've got one or empirical evidence.
This is the question of the morning.
No superstitions as such, but the only thing that I have done for many years, I can tell you, is I don't leave my house without touching my mother's feet, and I don't leave my house without seeing Saurav Ganguly and Novak Djokovic's photographs. These are three people that really inspire me, and no more superstitions beyond that. I just hope we have a good day at the bourses, and
Yeah.
So
we
Rahul,
can have a good Saturday evening for all of us.
yeah, most certainly. Rahul, very quickly. So if there is no tinkering with taxes, long-term, short-term capital gains, and if the capex estimates turn out to be okay, would that be a budget well done?
Absolutely, Neeraj. No question. And I think like I said, if there's no negative surprise, I think, even the pharma earnings that have started coming in are looking all right. I don't see any reason why the market can't rally today and going into Monday as well. Because I think, Neeraj, let's put it into perspective. I think the economic survey has been too optimistic in terms of projecting growth. 6.3 to 6.8% is too optimistic on current evidence. But let's say that number is closer to, say, 6.2%. We're still the fastest growing economy in the world. Yes, China valuations had become cheaper relative to India valuations a while back. And yes, of course, some monies have gone into the US after Trump has been elected. But I think these are more short-term phenomena. I don't think an Indian market that's heading towards a 4% fiscal deficit in a year or two from now, maybe by FY 27-28 towards the FRBM target, and a 6% growth. And Neeraj, I think this budget will probably set the tone, and we've got some hints from the recent Reserve Bank of India's operations that we potentially may be looking at a beginning of a small rate cut cycle, but that may also augur well. So I think all things considered, the start of the result season wasn't that good, but like you rightly said, if there's nothing negative, combined with what our growth projections and earnings are, I don't see any reason why the market could not have found a short-term bottom.
Rahul, what were you thinking when you heard about all the tariff noise this morning? And perhaps you won't see an impact today. Today is all about the budget, but 25% on Mexico and Canada, 10% additional on China, and then a promise of round 2 on the 18th of Feb, and a lot more actually.
So I think there are two parts to this, Tamanna. One of this is not entirely unknown. I think if you've heard his speeches and even the presidential debates that he has had in the run-up to the US elections, he has spoken about this ad nauseum, and I think there have been enough and more articles written about it in the New York Times and Washington Post over the last many months. So I don't think this has come as a surprise. If anything, India could be a beneficiary on the items these tariffs are levied on, because if there is an alternate country that they look to source these or procure these materials from, and India is a producer of that, we could stand to benefit. I think we have made a great start on the External Affairs Ministry with speaking to the counterparts in the US by allowing ourselves to take back illegal immigrants there. I think that will go a long way in terms of easing tariff concerns on a market like India. Add to that, our currency has been relatively stable. Our external sector has been very stable from the current account deficit standpoint. So I think the macros, and the most important point, Tamanna, I think if you look at the deficit that China has with the United States, I think it is close to $350 billion. India is just about $45 billion, give or take. So we are a fraction of what China is. So I don't think we'll go anywhere close to that. So anything that affects global trade that India produces is only going to stand us in good stead. So it is very similar to the China plus one theory that was spoken about at the beginning of the lockdown in COVID. We did benefit through sectors like EMS and chemicals, and I don't see any reason why that cannot persist going forward. And last point on that, from a foreign flows perspective, if you're looking at countries or global large investors that are looking to allocate capital, you would not go to countries where tariffs are being applied, because you would view it as a destabilizing equation between the US and that country. And if the US and India are able to find that equilibrium, we'll be incremental beneficiaries of foreign flows to that effect as well.
Rahul, Harsh also joining in. Curious to know, last 3 to 4 budgets, the focus has been on government capex, but the handover to private capex was always expected to happen, but hasn't really happened. That's where I believe somewhere we've fallen short. What's going to be that change in this budget that you're expecting to actually drive private capex?
So you've touched on a very important point, and it's a very good observation. I think if you look at the CMI announcements for the financial year, if you look at center, private sector, and state, they're all down 20 to 30% in terms of announcements. I think a bulk of the announcements that had happened in the previous fiscal year, and I'm talking pre-Hindenburg, were predominantly by one group that was looking at, which is the Adani Group, which was making a lot of announcements into alternate energy, ports, so on and so forth. So capex was pretty much being driven and announcements by one or two large business groups in the country. That took a little bit of a backseat, but I don't see any reason why that cannot revive in a very substantial way. I think the point about capex growth that you make, that's going to be, and the reason I say 10% is because the center, in their calculations, they also factor in the amount that they're giving to states for their capex in their capital expenditure number. And if you see, a lot of states have actually used that amount of money for what we would call populist measures. So and because we've had a lot of state elections, let's be fair. So I'm not sure how much the government of India would be, incrementally keen to devolve to the states from what they consider capital expenditure. But you're absolutely right, because I think, to the point that we were discussing with Tamanna a little earlier, when you have a period where global trade is going to be in a state of influx, the X and M component of GDP is not going to be in your control. So you're left with, consumption, investment, which is government and private sector. And then, of course, you have government spending. Private capex is not happening in a material way, neither is consumption. So the onus of GDP growth is going to lie on government reviving capex. The other important part is NHAI awardings haven't been that great over the last 2 years. And if you look at most road contractors, they haven't been reporting the best of results as well. So I would not be surprised if the government decides to make some more announcements to that effect, and they center it more around increasing PLI schemes and look at giving a boost to sectors like EMS as well as defense in this sector, and so also for roads. I think, Mr. Gadkari was doing a remarkable job. It's gone off the boil the last couple of years, but there's no reason to suggest why it can't come back in a material way.
Okay. Yeah, interesting piece. Okay, Rahul, stay on. Let's stay on, Sony. Just before we let you go, though, 15 minutes into trade, is the screen looking okay on this budget day? Is there anything specific you'd like to point out?
Absolutely, Neeraj. I think it's looking quite more than decent. It has not given you any sort of a volatile movement till now. VIX is cooling off. Like I said, it could be more of a sideways trade, and stock specific is also actually performing quite well. One particular stock which has caught my eye would be Hudco, which is actually closed above a 200 exponential moving average, and a positional basis looking quite strong. So possibility that stock can actually head towards the 250 plus levels quite strong. I think just hold on to this stock. 225 very good supports, and that's all from the stock specific and the markets. Let's hope out the budget plays out well and not too much of a volatile movement for the day.
Yeah, well, that would be welcome. Less volatility on budget day. Usually we don't see that, but let's wait and watch. But Sony, take a moment to thank you for joining. I really appreciate your time this morning, by the way.
Likewise, thank you so much for having me.
And we hope to have you back in soon.
Absolutely, sooner than soon.
All right, very short break. So much happening on the other side. We have a fantastic lineup of speakers. When we come back, stay tuned. The day that shapes the future of 1 billion dreams.
From the fields of agriculture to the backbone of defense.
From ambitious infrastructure projects to everyday tax policies.
Every decision counts.
How will this budget balance growth and fiscal prudence?
What will it mean for jobs, and what will it mean for your portfolio?
Join us for the most comprehensive coverage of Budget 2025
as we decipher the impact
of this budget on you. STT definitely needs to change.
Old tax regime.
The 1991 budget was truly a game changer.
I mean, the rest is history.
Union budget.
Budgets.
General elections.
Union budget.
Two more, Yashwant Sinha and P. Chidambaram.
Arun Jaitley.
Arun Jaitley, I'd have to say.
I think Manmohan Singh for sure because of the iconic 1991 budget speech.
STT. STT definitely needs to change because now if returns are not that good, it'll start pinching people.
Income tax.
I think income tax because that's what matters to me.
Old tax regime.
Depends. Old tax regime currently.
I would say healthcare and education.
I'd believe infra.
Oh, certainly more allocation towards infrastructure. That's what's keeping the wheels turning right now.
Game changer, but not in a positive way, was the budget when farm loans were waived off.
There are a couple of them actually. 1991, Manmohan Singh, that was the budget which opened up the economy. Then 97, Chidambaram, who reduced the tax rate from 40% to 30%. In 2001, I think, if I'm not wrong, Yashwant Sinha, who reduced all the duties on customs that led to the computer age or the IT age taking off in India.
I think the budget in 2022 where capex was done in a very big fashion.
There were several actually, 1991.
Welcome back. Very special day. We have on a trading Saturday the budget of 2025 to be introduced. But while we are at it, let me quickly introduce Radhika Gupta joining us, MD CEO at Edelweiss Mutual Fund, and we also have Pankaj Murarka, CIO at Renaissance Investment Managers, also joining us. Always great having you all. Even more special when it's in person. So thank you so much, both of you, for joining us. But I'm going to go to Parag. Parag, you know, the one thing or the one stock which is standing out despite tepid numbers is IndusInd Bank. Do you believe a bottom here has been made? There's been several questions, one time price to book, 1 year forward. Despite the poor numbers, stock is up 2%. So just a quick view on that one.
No, I think stock was oversold, definitely. And the numbers expected were horrible. And so it has not come so much horrible. So I would say that, and if you must have noticed, now the result reactions are often based on the positioning before that day, right? And so that positioning swings. But as I told you, because whatever, and of course there are some good positive commentaries coming out of at least in microfinance sector from some states. But definitely we are more focused on secured lenders, and that is why we hold ICICIs of the world, and as I told you, SBI PNBs of the world.
Yeah, lest Parag Thakkar think that we are talking to him only about banks. That's not the case. It's just that financials are dominating the conversation space right now. And just keep in mind that I think his earlier view was that PSU banks might have a different cycle this time around than what's seen in the past. It might well be the cycle of the PSUs. We'll actually talk about that with Pankaj Murarka as well. So as Harsh getting in both Pankaj and Radhika in the setup as well. And good morning from my end to both of you as well. Radhika, are you a contraindicator today? No, I'm just kidding.
I'm an indicator of low expectations that will be beaten by this budget.
That's great.
The optimistic answer.
I should have known I can't beat you at words.
You can't beat me. I've done reality TV. You don't beat me at this.
That's true. Let me add this. You're wearing Republican colors, and it's all
Oh
about
my-
what Trump is doing.
Trump is an alumni of my school, so let me leave it at that. You won't beat me on that one also. We went to the same college.
Okay, but anyways, so now all levity aside, how do you feel, Radhika? The market seems to be going into the budget with not too much of expectation, and that's a good thing.
Yes.
What is it that the budget can do to upset the apple cart? Let me reverse the thing per se.
So I think this is a unique budget in the sense that it's one of the few budgets where you're going in the last few years with economic uncertainty. Otherwise, you were going into the budget on a reasonably strong footing. Now, I think the market has always wanted a standard set of things from the budget. Fiscal prudence, which they've done a decent job of. So I think the one thing that the market will look at very carefully is capex, because if you look at this year's number of capex of 11 lakh crores, even if we do whatever we do, we'll be far off from meeting it. So I think the market will look at that. Not doing anything on consumption perhaps may upset the market, because given the conditions we are going into, some movement on consumption, what can really upset the market is, I think, further tax change, which I think is unlikely to happen, but really spurring up consumption. I mean, I think, Neeraj, the meta worry is that over the last few years, with everything you've done, why hasn't private sector capex started to happen? That animal spirit of the Indian economy, why hasn't that kicked off?
What's your hot take on that?
I think people are, it's chicken and egg. I think people are waiting for demand to kick in order to start taking those bets. And demand is not kicking in because people are not taking those bets. And you've done things. You've had corporate tax cuts, you've had PLI schemes to a certain extent. But I think that's the meta worry.
Pankaj, what's your take? Yes, we haven't seen capex kick off, but December was a good month for capex. Some very strong numbers that came out. Can the budget fortify that, or will there be disappointment?
No, I think, Neeraj, let's acknowledge the fact we're coming at a stage where private investments is weak. And there is a cyclical slowdown in the economy at 6.5%. I don't think so. We are discussing whether the economy is in a slowdown.
It is. It is.
Yeah.
That's not a point of discussion.
Yeah.
We need to acknowledge that.
No, sorry, just an aside, because earlier Rahul Arora said that even 6.3 is optimistic.
No, I don't think so. I am not so bearish. I think India's base case growth is somewhere around 6.5%, which is what the RBI also believes, and we are somewhere there. But I certainly think we can do much better in terms of our growth. Given the fact that we're coming on this backdrop, there are certain positives that we as an economy bring to the table. We are at an environment where when we talk about corporate capex is not picked up, we need to acknowledge, I have now come to a conclusion that in a cyclically slowdown economy, there is a structural slowdown in private sector capex. Because it's been 15 years, I have not seen annual spirits in corporate India. The last time I saw that was in 2006 and 7.
Wow.
It's been out 17 years, I have not seen that. Something seriously needs to be done. If you look at the private sector capex, the government has done its bit to an extent, because the central government capex has gone from 3.5 lakh crores to 10.5 lakh crores this year, even after undershooting their budget estimates. It's gone 3x, it's grown at 16% CAGR. The private sector, government was hoping that the private sector will take over the baton. They have not. The environment or the mood when I talk to corporate CEOs still is of measured or cautious optimism. They're optimists, but they're very measured in their approach, and they don't want to put their... The good thing is, but private sector balance sheet and the financial sector, banks balance sheet are in a very healthy state. The question is what is holding back the animal spirit. In segments of economy where the government have stepped in, investments have actually picked up. So you look at defense. Defense has done phenomenally well over the last 4 years because the government has stepped in. Railway capex has done well because the government has stepped in. You look at PLI. So all the manufacturing driven capex has really picked up, driven by incentives from PLI. I think what I would expect, my expectation going into the budget, given the fact, while this is the first budget of the new government, but we also need to acknowledge that it is the 12th budget. It's a government in continuity. It's a government in succession. You can't call it a first budget. To me, it's the 12th budget. I would like them to play, I would expect, given the fact that the mood of corporate India is slightly more cautious or cautiously optimistic, government needs to take the lead. I would be very disappointed if it's not a very bold budget, because you would not get this opportunity again. The government needs to take the lead.
By bold, okay, 2-3 things which are bold. Let's raise a sharp focus.
Aggressively double down on reviving investment in the economy. Whatever they did has helped, but probably we need on a much bigger scale. So if government bought PLI linked incentive in 2020 and 21, and over the last 3 or 4 years they've expanded that has really helped, that has picked up. But we need much more bolder. I think double down on investment related incentives in the economy.
But do we have that bandwidth? Sorry.
Resources are there.
Fair.
While we still have to manage our fiscal deficit, resources are there. and government can find resources. So aggressively, you just have to double down on that. And we are at a stage where some of the major economies, let's say the biggest manufacturing capital of the world, China is facing trade headwinds. India is unlikely to face those kind of trade headwinds from US. So we have an advantage from a global perspective where global companies are wanting to shift their supply chain to India.
Yeah.
We cannot let go of this opportunity. I must acknowledge we have missed the bus, or we have let go of this opportunity multiple times in the last 20 years. We should not let go, drop the ball this time.
Wow.
We need to go out and seize that.
What a strong statement there. In fact,
If we don't do that, I'm sorry, we are missing the bus again. So we need to do that. At the same time, we need to acknowledge that we are coming out of an environment where real incomes have declined. Household needs help. So you need to do something for the middle class. Some tax reduction for the middle class is important because you need to help, because on real income of household have declined in the last 3 or 4 years. Inflation has been pretty high or pretty steep. So you have to play, just to summarize, you have to play on all fronts. I would want a finance minister who's playing more like a Sehwag than a Rahul Dravid today. And you just can't let go of this opportunity.
So just to what Pankaj said and what Radhika also mentioned, just connecting the dots between the two, and of course I completely agree with middle class getting squeezed out due to inflation, and so the demand has taken a hit, and so private sector capex is not coming in. So for example, just to take from Pankaj's example, electronics we have done really well, right? Mobiles, because we are already consuming mobiles, we are importing it. Now we are manufacturing it. So for mobile, the demand was already there in the system, and we have created a incentivized structure in terms of PLI to manufacture it. So now we have to create demand. Actually, we need a demand booster in many sectors, I would say.
I would go to the extent that while as per the FRBM, we are supposed to get to a fiscal deficit of 4.5% next year in terms of this as B estimate. Even if she pushes the target out by 1 year, but if she doubles down on investments and reviving economy, the market and the economy will be extremely
unlikely.
Very strict on our fiscal deficit target.
Which is why I am saying we need out-of-the-box solutions. The economy is in the middle of a slowdown. You have to do unlikely things.
Okay, let's ask another guest about whether this has happened, and Radhika would have strong views here, but I need to get in Vikas Khemani in the conversation. By the way, I also need to thank Rahul Arora. Rahul, please enjoy your birthday. We've kept you waiting, but thank you and enjoy your birthday. But Vikas Khemani, founder of Carnelian Asset Management and Advisors with us. Vikas, the mood on the table out here in the studio is that there needs to be maybe some unlikely things done in order to revive animal spirits, because like it or not, private capex has not turned out, right? What is it that can be done within the limited fiscal space that the finance minister has?
Hi, Neeraj. I think, first of all, I'm sure there are lots of initiatives government will take or is taking will take to kind of push the economy forward. Of course, government front-ended lots of public sector investments has been doing. I think first half of the economy, maybe due to elections, infrastructure investments slowed down or government spending slowed down, and I think that got compounded actually by squeeze in the liquidity, and that is where I think the recent measures of RBI is quite helpful. I think, in my opinion, I am not as negative as some of the other co-panelists on the private capex. I do believe that it's going in the right direction. Of course, there can always be more. There's no doubt on that. The key reflection of that is in the order books of all the companies. I think most companies are expanding, but obviously you do not want to see the capex cycle of the previous time where reckless lending happened and that eventually created a problem in the banking system. So I think very often we compare with the China model and push that kind of investment cycle here. We must not forget that India is also a very ROE conscious market. If tomorrow promoters or companies do investments, keeping the target of the China's ROE or other countries' ROE, I think the markets won't like it, right? So I think that clearly the orderly capex should happen and is happening. The only thing probably one is not feeling as much is because it is not reflecting the credit cycle, but at the same time that is getting funded through internal accruals and the equity. So I do believe that. I think, of course, a lot can happen to accelerate investment cycle, and I'm sure government is conscious, and there would be some measures on the in the budget to push that forward. And other thing I would make is that actually what numbers they put in the budget really doesn't make as much difference as much as the execution, because we have seen that execution is what is going to drive the real thing, and I think that matters the most. And at least I was reading some article somewhere, yesterday, that government plans to spend a lot of money in this, current quarter. To kind of where they lost out in the first half of the year. So I guess some of those things are being done. So I would say that we are on right track.
Also joining in, I want your quick take. So from a global standpoint, demand seems to be difficult in terms of recovery. So we are relying on domestic. Now we've spoken for too long about how GDP per capita has to go up. It's not really moving in a significant fashion when you're looking at it over the last 5 years as well. What is it going to take in this budget to get there?
I think clearly, in my opinion, the income tax rates in India, especially the personal income tax rate in India, is very high. And I think middle class takes very, very big knock of it. In my opinion, even the maximum marginal rate is very, very high. So we definitely need to bring down the income tax rate. Government did bring down the corporate income tax to a reasonable level. I think that needs to happen. And if that happens, I'm sure it will be very, very positive sentiment, which will boost consumption, which will boost also ease the bit of pressure on the middle class. So I think that is one thing, in my opinion, and I guess that's the most likely outcome of this budget. Rest, I would say that government has been doing a lot more great things in terms of pushing forward the same agenda, execute more faster, more sharper. That is, in my opinion, far more important. And identification of the problem is there, but execution, I think, should be, in my opinion, a lot more accelerated.
Okay, let's do a quick round the table. And of course with Vikas on what is the top expectation on this budget, and no prizes for getting it right, but bragging rights. So, so let me start with you, Pankaj. You talked about a lot of things that you think should happen or hope will happen. What do you think will actually happen? One thing.
I think there'll be some relief for middle class households. So essentially, I'm expecting for some relief on personal taxes, expanding of the exemption limits or lower tax rates on the middle income household. I think there's a real acknowledgement. It's been about 3 or 4 years where real incomes for middle income households have declined. So we really need to solve that to help our consumption, because
and a big hint from Prime Minister.
Yeah, exactly.
Mahalakshmi.
So I think,
Mahalakshmi.
I hope so. Yeah, so I hope so. Mahalakshmi, Goddess Lakshmi, really.
Okay, so tax cut for middle class. Radhika, what about you?
I'll expand it and say, he mentioned bold thinking on capex. I think you should do really bold thinking on this tax cut and middle class. So it's not incremental 20,000 rupee, 30,000 rupee. I don't think that's the need of the hour. I think severe reduction in tax slabs, really rethinking some of these old limits, like the investment limit is, I think, 1.5 lakh. The interest on housing, I mean, it hasn't been revised for years and years.
Yeah, and it's been over a decade.
I mean, 1-2 lakhs of interest income in a city like Mumbai, Delhi, Pune, where real estate prices and rental incomes have gone. I think those need overhaul, actually, and absolute rethinking for the current reality. So part of it is expectation, part of it is a lot of hope, but I think you really need big, bold thinking on consumption.
Sorry, but where does the money come from for doing all of this?
So, look,
GST,
that's what I was going to say.
You're not getting that much.
Tax collections are up. They're not bad.
Okay.
And plus,
and by the way, I agree with him. I know Neeraj made a face when he talked about pushing out fiscal deficit targets.
I don't think it will happen.
I talked to my bond CIO, and usually bond market guys are fiscal deficit. He's like, this time if they let it slip a little bit in favor of growth, it's not such a bad thing. I would go that far.
उनको चलेगा.
नहीं, वो हो जाएगा. But my making a face is not about whether it should be done or no. My making a face is that I don't think it will happen. So that's
but we have a right to be wishful now.
The point is, when you're giving your 12th budget, if you can't be bold and you still have 4 years to go,
see, that's an incentive.
Then whom do we expect to give up out of the box reforms?
In fact,
who else will do it?
In these
Who else?
In
Who
these
else?
circumstances, it should happen.
You still have 4 years to go.
Correct.
to do your course correction.
Parag bhai.
So for once is middle class, 100% I agree. Some relief has to be given through some way. I think tax, reducing the tax bucket and all, which Pankaj mentioned. I completely agree with Radhika on housing part, which I also mentioned earlier.
Yeah.
That housing tax, that deduction has to increase. Because if you want to, as she said, right, that even if you want to buy a house in Bombay, you know, what does that 2 lakh rupee deduction mean to you? You know, so that has to, and remember, my center stage of my thinking is that right now we need demand acceleration in the country. See, you can not just say that PLI, I'll give PLI, so plants are put. As I told you, electronics, demand was already there. And so you just balance it, that now you are not importing it, you are not increasing your current account deficit, and you are manufacturing it, which is a very good thing to do. But in some sectors, you need to create demand, right? If there is no demand for tractors, how Mahindra is going to put the plant? So to revive the capex cycle, private sector capex, I think you need to revive demand.
Maybe just one more point on this whole thing when we are discussing this. I think the highlight or the headline of the economic survey really acknowledges this. Deregulation, deregulation, deregulation. On one hand, we want to revive animal spirits in private sector. On one hand, we want to regulate. Central governments, state governments just need to get out of the way. Just unleash the private sector.
This is what Chief Economic Advisor said yesterday.
Exactly.
Government,
so
please get
just
out of
get
the
out
way.
of the way.
Wow.
Let the private sector. These are corporates who can decide for themselves what is good and what is not good. Let the government not sit on judgment in terms of what you can do and how much you can do. Let people fail. Let companies fail. That's very much a part of the ecosystem.
I don't know if I'm a minority, but I'm not somehow so hopeful. I'm hoping I'm wrong here, and I'm hoping I'm here something like this. But
Vikas is not so rapid fire round, but okay.
No, I am with you on fiscal thing. Fiscal, I don't think so. They will compromise.
Okay, Vikas, what is the one thing that you think will happen this budget?
Common expectation is about the sort of personal income tax. But my important, point is that I think FMs should also do something to get money towards the fixed deposits or to the banking system. I think because the tax rates and the previous incentives being removed, there's no more incentive to invest into fixed income, and that as a result of that, you have a very small amount of money going towards the banking system and credit side. And that, I think, if you ask me, is a very big risk today. And eventually, banks will give it to for corporates, but most banks are struggling in the growth in the deposit, and that's where I think, in my opinion, some tax incentives should be brought back so that the middle class is incentivized to invest into credit products.
Yeah, I think, Vikas, it's an interesting point, right? We're just making this point that it's very rare to see a stock market enthusiast and investor talking about encouraging money or capital flow towards fixed deposits, but maybe because banking needs
That's
it.
the right thing to do for the economy.
Yeah. No, I get your point completely.
I mean, because Radhika is over here and she's like, if the money is going to go to FDs.
No, I'm actually not saying that.
Flow.
By the way, I have told, whenever I've had the opportunity, I've spoken to many people in government and said it's actually not about FD, but right now, today, what you've created, and look, I'm a mutual fund person, but you've created a situation where equities are at 12% long-term tax and fixed income is fully taxable, whether it's in the form of debt mutual fund or FD. It's a little bit of a wide gap from an asset allocation point of view. So you can rethink FD, but you can rethink debt mutual funds also.
Radhika,
Neeraj isn't liking
you just set the cat amongst the pigeons. I should have. Am I wearing green? Yes. I think me and Radhika are opposites today.
But she is not suggesting increase in the equity. She is suggesting reduction in the
I'm
tax
not saying that at all. Never would I say that.
income side.
Now does that change?
No, I know she was not saying that.
I would never say that.
Exactly.
Just one more point on the fiscal deficit. Since we're discussing, or I made that point of letting go of fiscal deficit targets. Probably the FM can borrow courage from US. Look at US. They're in 5th year of this economic cycle. Yeah, they are running 6% fiscal deficit.
Correct.
I understand that we don't have the privileges that US has of having a sovereign currency.
Yeah.
But if an economy like US is running 6% fiscal deficit in the 5th year economic cycle, I certainly think we can let go of 30-40 basis points to accelerate our growth.
Okay,
And
little
just
poor
one
joke.
more thing.
Courage of the US is President Trump back again after promising to put tariffs everywhere.
Just one thing I wanted to say on this. See, disinvestment, we are not doing anything. We actually missed a bus of a huge PSU rally. Right? Huge PSU rally. IRCTC and Hindustan Zinc, if I add the government stake value at today's price is 80,000
crore. But that's off the table now because that's unpopular. So don't expect anything
What
which
I'm
is
saying is,
That's been the grouse always, right?
No, but that intent is also clear. They do not want to let go of the family silver. The idea is let's fix it and run it.
PSUs need to be looked at.
But just the point that we need to slip into a break. But this has always been the grouse, and the government is not able to disinvest at the right valuation, which has always been the pain point. Don't think it's changing, unfortunately. But all of you, thank you so much for being with us today. It's great this conversation that's happened today. Vikas, thank you so much for being with us on the show today as well. Really appreciate your time. We need to slip into a very quick break, but more budget coverage on the other side. Stay tuned.
This is the day that shapes the future of a billion dreams.
From the fields of agriculture to the backbone of defense.
From ambitious infrastructure projects to everyday tax policies.
Every decision counts.
How will this budget balance growth and fiscal prudence?
What will it mean for jobs and what will it mean for your portfolio?
Join us for the most comprehensive coverage of Budget 2025
as we decipher the impact
of this budget on you.
Well, the union budget is right around the corner. It's a very interesting time leading up to the budget as well for the policymakers as well as, us as shareholders, because we see a lot of movement in the Nifty as well as speculations are rife with what could be some of the measures that are announced in this particular budget as well as has been in each one going into the same. We look at some of the key moves that have seen in the Nifty before as well as after the budget and get you some of the biggest measures that were announced in these budgets and what could have led to the strong Nifty reactions. Let's first look at 2024 because we had two budgets announced in this particular year. One was post the elections as well, and we did see a 1.5% move in just a week after, and that momentum was continued in the month as well. Leading into this budget, there were a lot of speculation, so we saw a downward reaction of the Nifty in the past week, and we did see some of the measures such as the standard
All right, just about an hour to go for the big day. Live pictures coming in outside Parliament. Finance Minister Nirmala Sitharaman walking in with the budget document. This is the heightened expectations is very interesting this time round. We keep saying that budget is actually just a statement of accounts of the country. No, this time it's a statement that India is making to her people and to the world as well. Meanwhile, markets are up in anticipation. 23,557 on the Nifty. Not half bad for budget morning at all. The setup has been going on for the last couple of days as well. But look at some of the big movers this morning that we are seeing. Definitely the budget play in action can be seen very clearly. If you look at some of the fertilizer stocks that have been moving and IRB Infra that has been moving, KPI Green. So I would say more action in the broader markets than on the main line as well. Ashish Gupta joining us this morning, Chief Investment Officer, Axis AMC. Ashish, very good morning to you and thank you so much for your time on Budget Day. I know it's a Saturday. We're all up, awake in anticipation and excitement, waiting to see what happens. What is on top of your list of expectations?
Good morning, Tamanna. No, I think, as you said, this is an important budget. It's really the first full budget of the new term. And I think, to my mind, the fiscal deficit is really what we need to see if the paths of consolidation continue. Of course, there are growth imperatives as well, but I think in the volatile global macro environment that we have, it is important that India continues to demonstrate its strong macro fundamentals. And it will be important that the government continues on the path that it had indicated last time, that in FY26, the fiscal deficit will drop below 4.5%. So I think that is the first part, and I think it is important also because this is needed to ensure that the cost of capital for the private sector continues to come down. So to my mind, that is the most important indicator. I know there are a lot of expectations around potential tax incentives to boost consumption. But to my mind, more than taxation changes, the focus has to be on improving non-tax revenues. And I think even your previous panel spoke about it, that how do we get the non-tax revenues up? Over the past few years, we have seen tax to GDP improve significantly. But non-tax revenues have not gone up. So I think if we can get some impetus on that, that will actually enable the government really to up spending and support growth.
Ashish, what's the best way to do that? Good morning, Neeraj here. What's the best way to do that, non-tax receipts? Because, I mean, the needs for funds are enormous. The ways to get them, very, very limited, right?
Sure. So I think divestments are really the only way, and it also need not be strategic divestment. It not just be letting go of control. Over the past few years, we have seen, given the improved profitability of many public sector enterprises, improved governance in many enterprises, there have been significant re-rating of these companies. Their valuations are in many sectors comparable to their private sector peers. So the government diluting their shareholding in these companies is something that is certainly possible. In fact, the government can actually also potentially look to go below 51% in many of the companies. But even if they continue to hold majority, there is still a significant room to raise resources, at least this year. But if that path has to be continued, I think then the government also has to think about in which corporations can they operate with below 51% shareholding.
Ashish, in your view, what would be the couple of big disappointments if they were to come, both from a market's perspective and even from an economy perspective?
I think, to my mind, first of all, I think the biggest thing I'm watching out is fiscal deficit. So if there is any kind of dilution in the paths of fiscal consolidation, that will be a disappointment. I know there are growth imperatives, but as I said, given how the global macro is set up, we don't want to give that signal. The second to my mind will be if there is any further changes in the tax structures, particularly direct tax structures, that because already in the last couple of years there have been significant changes. So I think too much tinkering around doesn't really help. You need the new tax regime to stabilize rather than make very frequent changes.
Okay. Ashish, just a word on what has been the big talking point, right? That fisc deficit number, which at 4.9 is a given. Now, assuming that the receipt picture is yes, not looking all that great, but the capex done or the expenditures done have also kind of lagged this time.
Yes.
If the fiscal deficit number for the current year is at 4.8 and she sticks to the glide path or improves upon it, normally it would be a positive. But in this case, would the markets be disappointed with it? Because that would mean that the government is steadfastly on the fiscal consolidation path at the expense of spending on economy, because currently the economy needs some bit of boost to revive demand. So would a aggressive fiscal consolidation be looked upon as a negative as opposed to a positive, or not so?
Sure. So I think if the fiscal consolidation is much more aggressive than the 4.4, 4.5% that has been indicated, yes, I think that will also be seen as potentially a negative signal from a growth perspective, because we know actually it is government spend that has been a key driver for growth for the last 4-5 years, including on the investment side. And given the fact that you have, so actually, as you rightly said, FY25, 4.8, 4.9% is very easily achievable, right? So I don't think there are going to be too many surprises there. And whether FY25 ends at 4.8 or 4.9, it does not really matter from a growth perspective, because that is already in the past. So it is really what is the FY26 government expenditure that is going to come through? Is it going to grow in double digits or not? That is the key that we have to watch out for.
Okay. Ashish, in terms of what budget can do from a capital markets perspective, we've been speaking about economy, we've been speaking about consumption, but purely from a capital markets perspective today, what would you say is the top factor that will give some relief?
So, frankly, some of the challenges that the government has this time around. So, in the past couple of years, the government has had very good tax buoyancy. So, if you see every year, tax revenues have grown faster than the GDP growth, and that has enabled the government to really up the capex spend and overall expenditure. I don't think the market is expecting that flexibility to be available this year. So in that sense, the expectations from the budgets are not very high. Capex growth we still expect to be in double digit, but as Neeraj highlighted earlier, it is coming on back of the fact that FY25 capex spend probably will be lower than what was budgeted. Right? So from revised estimates, you will have a double-digit growth, but if you potentially look budget estimate to budget estimate, you might not have a double-digit growth. While there has been ask for some boost to consumption, some measures to boost consumption coming from the budget, but I don't think markets have really kind of priced in that, or so if you see the market behavior, price actions over the past few weeks, it is not as if market is going into the budget with some very high expectation. So I think as long as there's no big disappointment in the budget, we don't think there should be too much negativity, even if there's no fresh big bang measure to boost consumption.
Thank you so much, Ashish. Ashish Gupta there from Axis AMC on what is expected from the budget, and hope you have a great rest of the day. We're waiting and watching. Just about 45 minutes ought to go for the budget speech to start, but meanwhile, quick look at the markets and what's buzzing at this point. Mahima is joining us with a list of top buzzers in trade right now. Mahima.
Right, so it's a mix of stocks which are buzzing on the back of earnings as well as, pre-budget. There are some trades being taken in certain sectors. To start with, Idea Forge is the top gainer today, buzzing ahead of budget, and the stock did see a significant tanking post its earning. So there is some, buying there seen. Now the second one is Prestige Estates. This is on the back of a Jeffries note, which has upgraded Prestige Estates to buy from underperform and has raised the target price to 1600 versus 1420 earlier. What they're saying is that the large capex program is on track for the company and providing headroom for scale up going ahead. The next one on the list is MedPlus Health Services. This is buzzing on the back of its earnings again. Margin expansion was on account of increased contribution from private labels, is because of which the stock is buzzing in trade today. The next one is Inox Wind, again on the back of earnings, where revenue was up 81%, EBITDA up 123%. Margins have improved from 18.4 to 22.7. Net profit up 116 from a 1 crore amount. In terms of why the EBITDA has seen such a uptick, 82% YOY jump in execution of a 189 megawatt. There was an inventory reversal of around 364 crore and 28% annual drop in EPC, O&M and common infra expenses has taken place. Another set of stocks that is buzzing in trade today is the railway stocks. This is ahead of budget, of course. SJVN, Jupiter Wagons, Titagarh are all buzzing. One separate set of stocks that are buzzing are on the back of potential support for battery energy could have some space in the budget today, which is why we are seeing an uptick in JSW Energy, Tata Power, NHPC, Vari Energies, Adani Green, Amara Raja and Exide Industries. Now these are the top gainers, of course, but we also have some top losers. The first one being Aster DM on the back of numbers, where their profit was around down due to one-off merger expense, which is why it's seeing hit. Otherwise the numbers were in line. The revenue was up 10%, EBITDA up 25%, and margins have improved from 15.9 to 18%. The second one is 5-star business, which is taking a hit in trade today, where net profit was up around 26% and total income was up around 28%. And lastly, Karnataka Bank is also seeing some profit booking in trade today after its earnings, where net profit was around 284 crore versus 331 crore. Gross NPA at 3.11%, net NPA at 1.4%, and the net interest income was down by 4%, which is why we are seeing a downtick in that particular stock. So all of these counters either in green or red, but are buzzing today.
Okay, so a lot of buzzers. One of them is actually Wockhardt as well. Let's pull up the Wockhardt stock because it's their new super hit Zenic, which has got a nod and will go into second phase of clinical trials. In fact, we spoke exclusively with Wockhardt chairman Habil Khorakiwala on this wonder drug Zenic. Listen in.
We have just completed phase 3 clinical trial, and this clinical trial establishes Zenic is a superior treatment, which is very rare happening in antibiotic or any drugs. Second is that we should be expecting this drug to launch in India by early next year, and in US maybe middle of next year, because we will be filing in US sometime in middle of this year, and then we expect sometime in the middle of next year to receive approval.
All right, now to our budget masters who are with us in the studio and will be with us through the budget speech and will tell us, based on their expectations that they'll lay out right now, how did the budget fare, if you will. Pranav Sehta, National Leader, International Tax and Transaction Services, EY, Mihir Vora, CIO of Trust Mutual Fund. Both of them with us in the studios. Gentlemen, both of you, thank you so much for joining in. Really appreciate your time. There was a hot debate around what is it that the budget can do within the limited space does it have. Can it overshoot the fiscal deficit target a little bit in order to spur capex demand, etc.? Mihir, initial thoughts.
See, I think there is limited, space for the government to maneuver, especially given the fact that we need to balance investments and infrastructure, etc., versus boosting consumption. So there is a fine balance to be maintained. The good thing is that, at least from the stock market point of view, till say the middle of yesterday, there wasn't much of expectations. Markets have been kind of discounting a lot of slowdown, etc. And just because the Prime Minister made some good comments on the middle class, there was a bit of an expectation. But apart from that, I don't think we are going in with too many expectations in the budget. So no bad news will be good news, I would say. Okay. In the budget, and anything else will be a bonus.
I find this interesting. So you're linking that comment, and you know, if you have that soundbite, we should quickly play it as well, where Prime Minister talked about how you know, Goddess Lakshmi will shower her blessings on the middle class, as a kind of trigger for the market, that there is going to be a big boost for consumption. Is that the biggest ask right now, Mihir?
I think that's not the biggest task because as far as consumption is concerned, for the rural masses, states are already doing a lot. You know, all the 12 states which have introduced different schemes for women, etc., all put together is already 2 lakh crores of stimulus. They are almost 0.6% of the GDP, which is already being given to women as stimulus. So I think rural-wise, the centre doesn't need to do much in any case.
I mean, there are enough of those Ladli, Behna and all of those schemes.
So that's almost 2 lakh crores on annualized basis. So that's, you know, a decent stimulus in any case. For the urban middle class, what can be beneficial is you do see some, you know, tax breaks, etc., because we are seeing some signs of stress in the urban consumption theme. So anything which boosts sentiment for the urban middle class will be good. But I think more important to see is whether the thrust on central government capex continues, because that's been one of the big drivers of the economy for the last 5 years. We've almost seen 25 to 30% compounded growth in capex spending since 2020, and that's been one of the pillars why we could, you know, come over the corona slowdown. I think that still needs to continue because the private sector still hasn't kicked in to the extent required. So a continuation of schemes of government schemes on railways, roads, you know, defense, etc., plus more sectors and larger outlays for the PLI schemes is something that would be more important in my view.
I'm just going to play out that sound clip from Prime Minister, and then we'll ask Pranav Saita whether there is enough space and what is the possibility of those tax cuts we're all anticipating.
मैं मां लक्ष्मी से प्रार्थना करता हूं कि देश के हर गरीब एवं मध्यम वर्ग समुदाय पर मां लक्ष्मी की विशेष कृपा रहे। साथियों, ये देश की जनता ने मुझे तीसरी बार ये दायित्व दिया है और इस तीसरे कार्यकाल का ये पहला पूर्ण बजट है।
Okay, so a couple of things that we need to talk about. I think on the personal tax front, as well as I would say on indirect taxes, the tariff response as well. So Pranav Saita, let me start by asking you about the personal tax front and this idea that the boost to consumption can come with some tax tinkering. We've seen, and tinkering is the word, very, very little here and there, which doesn't actually do much for consumption.
Yeah, I think it's more about the sentiment and the expectation than much ahead of that. But I do feel that something will be done in terms of helping the middle class get a little more boost to consumption. May not be very significant in the ultimate analysis on the pocket of the middle class, but still that helps in terms of the sentiment, as well as the fact that the government is thinking about them. And that's, I think, one thing that will happen. I also do feel that to some extent there will be an impetus given to Make in India, maybe through PLI, indirect taxes, schemes and so on, or maybe through some amount of restoration of a concessional tax regime on manufacturing. I do hope that comes. Since we are talking of expectations, I do hope that something that comes, because across the world we are seeing an impetus being given to domestic manufacturing and so on. So I do feel that will help to a large extent.
Which sectors do you think there's a possibility of seeing this in?
I would feel that this might be across the board, but at least in sectors which can promote a lot of employment generation or job creation. I think that's one thing that the government will want to focus on, to somehow bring about that animal spirits back again. And unless manufacturing is given that fillip, job creation is not going to be easy given our demographics. So I do hope and feel that that's something that they will also focus on.
Mr. Saita, good morning, of course, and it's always great having you. All right.
Sure.
Just wondering, one of the problems for the capital markets has been the incessant outflows Now, taxation changes can't change that. It needs to be economic conditions. But taxation changes at the margin influence whether or not there are enough incentives out there or disincentives to come in or go out, right? Is there anything that you hope, or is there anything that you fear in the budget, fine print or otherwise, that could have a bearing on this?
I hope not. And in fact, I do feel that if they maintain the stability, consistency, clarity, and providing certainty, investments will come in. The chief thing here is to ensure that there is ease of doing business. That's, I think, where the second generation of reforms is really required. Because unless, and the economic survey speaks so much about it, deregulation. I think if that's what happens and the government capex on infrastructure keeps up, which over the last 8-10 months has been a little muted, I think those two things, deregulation and providing the right kind of infrastructure, will be the best fillip that one can give to investments, both foreign as well as domestic investors. Otherwise, even Indian businessmen probably will invest more abroad than in India, is what we are seeing these days. So I do feel that that's something that will be very important. One, keeping the regime stable and predictable, which I think the government has done a good job so far and will continue to do that. Second, capex, which has been great over the last few years, but the last 8-10 months have been really very tepid, and that I think needs to pick up, government capex infrastructure building. And third is, as I said, to some extent ensuring that deregulation and the next generation of reforms, for which also I think that taking states along will also be very important and critical. So somehow building that consensus which they built, I think when they brought in GST to a large extent, that consensus building and taking states along, because that's where a lot of the next generation of reforms will have to come as well from, whether it is land, labor, some of the infrastructure and so on and so forth.
That's an important point because in some sense, what states do or don't do has a large bearing right now on how the economy does, because there is a red alert out there on the fiscal health of a lot of states who are doling out freebies currently in order for political compulsions, if you will. So what to your mind is arguably one of the most important things to watch out for from this perspective in the budget, if at all?
See, ease of doing business can't be addressed in the budget. It has to be built, based on consensus and taking the states along. I think, but even more important is how to eliminate the real grassroots level harassments. I think that's a key part of ease of doing business, and that's what needs to be addressed in terms of, I don't know, governance structures or reforms, anti-corruption movement. So, in fact, if that improves, I don't even think we need PLI. So PLI essentially directly or indirectly is a cost of or trying to make up for all these inefficiencies at the grassroots level. So I think that would probably require more of a mindset change rather than any thing in the budget or fiscal incentives, I would say.
Yeah, but just to that point, Neeraj, now either you look at subsidies as a red flag or you look at them as a consumption boost, because in the course of this conversation we've ended up looking at it both ways. For now, at least, if that's what's propping up the economy to some extent, wouldn't that at least be a positive from a market's perspective?
See, subsidies are now going to be a global phenomenon in my view.
A global
phenomenon, because I think the end game everywhere is the world, especially the developed countries, are so much deep in debt that the only way out structurally is to inflate their way out of the problems, whether it's the US or Europe, anything, right? Which will mean that you will see asset prices, continue to be high. Inflation will be there structurally as a sticky way, and which will mean that the lower income category, population will have to be directly or indirectly subsidized, whether it's UBI or, as we saw in COVID, the US was giving $1,000 checks to people. I think that will have to continue because inflation is going to be sticky, especially in the places where you have seen so much debt building up. Even, for example, President Trump's measures to, introduce import duties will, initially at least, till the time you have US ramping up its own manufacturing, initially it will be inflationary in nature. So that's going to be a structural issue. As we speak, in the last couple of months, again we have seen food grains, etc., prices go up. FMCG companies already talking about raw material price increases.
Yeah.
So I think inflation is not going to go away in a hurry, which means that subsidies will be a structural part of any economy.
No, just on the tariffs bit, and I wanted to get your view, Mr. Saita, because we did a story that we're expecting in this budget a custom duty drop on 7 to 8 items imported from the US. It's, in a sense, perhaps you can look at it as a preemptive move as all of this tariff talk goes on. What does India need to do to be on the right side of this tariff trade war, this global tariff war which is going to erupt?
I would feel that yes, some definitely signals might come along, but primarily anything that we do will be measured. I would feel we would wait for what exactly US comes up with, and I don't think India is on the top of the list of countries which will face the heat of tariffs.
Yeah.
So we would wait, I think, to see how it goes along. But yes, any and every items which are primarily inputs where India is value adding on that and sending out again, particularly, I think that's where we will see definitely tariffs coming down.
I think our fight is not really with the US.
Yeah.
The duties have to be with China, right? Imports from China is the bigger one.
Yeah, but just that, I think, so we've done a small exclusive 3-4 days back. It's a very small, tiny item, but 7 or 8 key items from the US might see some bit of duty changes.
Right.
Maybe it's ahead of the Trump-Modi meet or Modi-Trump meet, as the case
Symbolic.
may be. Symbolic in nature, but yeah, something like that to come out as well. So pretty interesting things that might happen.
Yeah, yeah. Ramdev Agarwal joining us on the conversation this morning, Chairman and co-founder of Motilal Oswal Financial Services. Mr. Agarwal, thank you so much for speaking with us here at NDTV Profit. Absolute pleasure on what is turning out to be perhaps an exciting morning, more optimistic than we would have thought at the start of this week.
Hello, yeah, good morning. So clearly things are kind of evenly balanced, and there's a lot of hope that the FM is going to shower goodies for the middle class and women class. That looks to be what even PM's expectation is. So I would think that the commitment to what you call Viksit Bharat, that's coming out very clearly, and one of the ways to increase the GDP growth rate from say 6.5% to maybe 7.5% would be the giving some kind of incentive to the middle class for consumption. That looks to be the theme right now.
And do you think that that's the single most important perspective? I'm just wondering, on a budget morning, and we're speaking half an hour before the budget, what does a Ramdev Agarwal have on his checklist to look at? Will you be looking at the capex figure, the fiscal deficit figure? What is the top point that you're looking at?
Yeah, so I've noted down 3 points. One is the middle class, what exactly they end up doing for the middle class, and where FM has said, clearly PM knows what exactly is going to come. So his wishes are around middle class and women class and poor. So clearly we are going to see some bundle of measures out there, whether it stands up to anything in the market or not, that's one thing. Second is the commitment to 8% growth, whatever it takes. I mean, it is for the leadership to say that we are committed to 8% year on year. There will always be some cost here and there, but growth solves a lot of problems. So how committed they are, bureaucracy as well as the policymakers and leadership, to 8% thing. Third, the credit flow. I think one of the biggest things which has hurt the economy in last 12 months, in my limited understanding, is the credit flow into the entire economy, which has come down from 15-16% to 10-12%. If we remain at 10-11%, do whatever, I don't think we'll ever touch 6.5%. That's my sense.
Okay. Mr. Agarwal, good morning. Neeraj here. I love the backdrop, budget bullets, maybe dodge any bullets that might come our way if they do. But here's my question, sir. One of the things that some of the panelists have stated today, of course, the unequivocal focus on growth, and therefore, if the FM and the government, or the FM in her wisdom, decides to deviate a little bit from the fiscal glide path, if that shows an intent to invest for growth or creating demand. So if the next year's number is not 4.5, right, and it says that it is being done to stimulate growth, will the markets take it well or will the markets be disappointed?
I don't know about the market, but I'll be very happy. In the sense that, to me, growth is paramount, and if you can do fiscal, to me, if you can do the growth and then consolidate fiscally, that will be very good. But I would not put fiscal consolidation as a priority over the growth. Because once growth comes, even fiscal consolidation is possible because your tax revenues, they get boosted.
Okay, that's one. And something that I'll ask Mihir Vora also, but just a follow-up question to that, Mr. Agarwal. We want to do a lot of things. There is very limited resources as well. This time around, we know that this year the revenue picture also has not looked that strong, right? So let's assume the fiscal path is maintained, if you will. There is not, I mean, we haven't done enough capex, and let's assume that number stays as is and doesn't really increase too much, if you will, and therefore misses the budgeted estimates too. Will that be a disappointment or will that be a need of the hour because revenues also have been lower?
I mean, let's see the actual number, what comes out. My sense is that if they're able to boost the GDP growth and nominal GDP growth rate, even if with a little higher inflation of about, say, 5%, I think they will have enough revenue. And so they will have enough resources if they want to do, if they want to maintain and actually increase nominally the capital expenditure. Because the best place where the capital expenditure will give rewards to the economy is going to be infrastructure, and that only government can do. So clearly the momentum which we are seeing in last few years, where government is coming very aggressively onto the infrastructure side, that momentum should be maintained. And if anything, whatever was the budgetary provision last year, the next year should be somewhat higher, at least 10-12% nominally, so that it may remain percentage of GDP same, but nominal value will be 8-10% higher.
The other piece, Mr. Agarwal, that from a market's perspective, what does it look to? The last few years have seen this unequivocal focus towards creating manufacturing assets, giving PLI schemes, etc. That may well continue. But if there are tax changes or other changes done in order to boost consumption, all right, and boost household income, does it change the texture of the market in that the market starts rewarding consumption themes, staples, what have you? And is that fair too?
See, Neeraj, actually market is looking for earnings growth. I mean, from whichever sector it comes. It is not necessary from the only consumption side the earnings growth should come. If aggregate earnings growth, which is now flattened from last year 1,000 rupees EPS for Nifty, it has come to about 1,050 for the current year. Next year, if it doesn't scale up to 10-12% from 1,050 to say more like 1,200 or 1,150, I think market will not be excited. So it doesn't matter from which sector it comes, whether it comes from infra side, consumption side, energy side, you take your pick from which side it comes. But my aggregate earnings growth should be more like, I'm speaking as a capital market guy. If my earnings growth next year looks to be, my head of research revises the earnings growth projection for 25-26 to by 12 to 15%, that will be the big day, whether it comes by tax cut, whether it comes by earnings growth, I mean per se top line growth, or margin expansion, that is all. But 12 to 15% earnings growth next year is almost a must to hold the markets at 23,000.
Okay, I know I'm just on earnings growth, Mr. Agarwal. Want to get your view. Have you, if there's a scale of disappointment or optimism, how are you feeling from what you've seen so far? Because Q3 and second half was supposed to be the better picture being painted. This is what we all heard in the end of Q2. What have been your thoughts when you've seen the earnings growth? Because at the end of the day, budget will go one day affair. After that, you will have Trump doing whatever Trump does. But this is the core number that we need to watch.
Yeah. So clearly last year, thanks, I mean, if you see the economic survey, Mr. Anantharaman has gone about saying that the slowdown is not structural, it's seasonal, in the sense that because of elections, the capex, the government capex slowed down, at least in the first 9 months. And that has led to whatever Q3 5.4% or somewhat like that. It's not a structural slowdown in the economy, it is more of a seasonal. And that's why he is, in one of the interviews I heard yesterday, he said, of course in the economic survey is written that their expectation is about 6.3 to 6.8, but he is the guy who is insightful today because he has written the whole thing. So my sense is his expectation of about 7% for 25-26. I would think that he would be on the right line of thinking. And if that 7% comes with 4.5-5% inflation, I think we'll have good time. In the sense that corporate earnings will pick up by more than 12 to 15%.
Got it. Mr. Agarwal, I have one final question, and that is not necessarily budget linked, but you could argue it's budget linked. And I'm saying that let's assume the budget dishes out most things that you say, if not all. I would love to know at the start of 2025, how bullish, bearish, neutral is Ramdev Agrawal from a 12-month perspective? I know you're very bullish over the long term. Just trying to think for the slightly shorter term, which is 12 months.
Yeah. So 12 months looks to be, I would not be very bullish, let me tell you. I would be a little more on cautionary basis, in the sense that I would expect about first half I would not be that bullish, but second half I'll be very, very bullish. So on the whole, for the year, with little pain in the beginning, I think we should do well. And so I would be cautiously optimistic for 25-26, particularly back-ended.
I want to get your view, Mr. Agarwal, on what we've been seeing in terms of tariffs. And while, if I would look at it from three factors: one, what the government does; one, what corporate India does in terms of its earnings and its performance; and then one is geopolitical. And geopolitical factors are going to be dominated by tariffs. All the announcements this morning, how did you look at it? And is this an opportunity for India or a threat?
I think it will be both ways, in the sense that I think it will be more of an opportunity, because the big daddy in the global manufacturing is China. And if China is being restricted, clearly the tenor of Trump's tariff policy looks to be make Chinese imports a little uneconomical, so that the local manufacturing becomes a little more viable. To that extent, if there is not so much of tariff on Indian imports, probably it will be a huge tailwind, longer term tailwind for Indian manufacturers to step up their effort and export a lot more to the US. But that looks to be pretty, simple analysis of what is going to come. It's a very complex thing. We have to play as it comes. So let's not speculate anything till final things have come.
Okay, fair enough. We don't know yet. If tariffs for China, good for India, we don't know what's going to happen from the Indian perspective. But in the context of this budget, Mr. Agarwal, what do you think we need to see? Would you wait to hear some clear policy direction there?
Yeah, so clearly, as I said, their ultimate North Star is the Viksit Bharat by 2047. And it is very well clearly laid out that compounded growth of about 8% is required. We are at about less than 6% right now, as it turns. So you have to have very, very clear policy guidelines. And where there is will, there is a way. And once Mr. Modi has set his eyes on Viksit Bharat and 8% growth, all the forces and the policy making will come together, whether it is a deregulation of the businessman or ease of doing business, regulators coming, little soft pedaling on the operators. Like credit flow into the economy. Once you slow down the credit flow into the economy, a lot of other measures don't work. So I think first they have to do the plumbing of increasing the credit flow into the economy. And that, I think, at least economic surveys talked about it. Let's see whether it comes or not. Or maybe it may not be in the budget, but at least follow on to the budget. There could be rate cut, there could be, I would expect a lot more monetary action than the fiscal action as we go forward in next 1 month.
Just, I know we've been saying one last for a while, but this is really the last one. I'm just wondering, how are you looking at the pain point in the markets right now? And do you see Feb 1st and then Feb 7th after the monetary policy opportunity for a pivot here? Just wanting to get what's in your head right now when you think about where Indian equity is going.
Yeah. See, broader market last year, actual portfolios did very well, like anywhere between 35 to 40, 50% return on the back of the broad index doing just about 8-10%. So clearly we have beaten the index last year. This year, I think index will come and beat us all. So most likely, it will be very tough for most of the active managers to beat the broad index. And hence, there could be a churn from mid and small to large cap. But that happens only when foreigners, they start buying big time, because they love to buy large cap, and large cap valuations have become very reasonable. So let's see when the tide turns, and it turns when you don't expect it. So quite possible times are coming when things may change and surprise us the pace at which it changes. So I would think that there are a lot happening in the Indian economy. Large caps are reasonably priced. Mid and small are still slightly elevated, and that IPO market is kind of bringing it down one by one, because the offerings are there relentlessly. So it's one of the hottest IPO market. I think one of the things which I didn't say, and I think it didn't come even in the economic survey, is the flow of the risk capital, unprecedented flow of risk capital in the economy. If it is harnessed well, it can change the complete trajectory of economic growth and the pace at which we can develop. So that is what is going to happen in next 1 or 2 years, and I would like to see how the FM helps that flow and uses that risk capital flow into the economy very, very creatively.
Well, let's hope a lot of these wishes turn out to be true. Mr. Agarwal, thank you so much for joining in today and giving us your thoughts. Really appreciate your time.
Thanks.
All right, that's an important market view from Ramdev Agrawal of Motilal Oswal. And just before we ask the follow-ups to some of these points, and in fact, I think the points collaborated between what Mr. Sehta said, what Mihir Vora said, and what Mr. Agarwal had to say. But before we do that, just a quick perspective from our research team as well, which has been waiting to talk about what should you watch out for ahead of the budget. Remember, it's not a bad market in that we are at about 1/3% in the green ahead of the budget, and small caps continue to trudge higher. In fact, it's not a trudge really. With the 1.7% gain yesterday and the 1% uptick today, small caps are really doing well. What are the stocks to watch ahead of the budget? Somit is here with a list of some of those. Somit, tell us the names and why you have chosen those.
Well, firstly, top on the list is ITC, because in the last 3 budgets we have not seen any major tax hike related to cigarette come in, and so Street is expecting that there would be definitely a tax hike on cigarettes this time. So if it's a double-digit tax hike, then definitely it's negative for ITC, but a mid to high single-digit tax hike would be neutral, and a low single-digit tax hike would definitely be positive for ITC. Apart from that is the capital goods and road infra companies like L&T, IRB Infra, Dilip Bilcon, that would be in focus. Now the Street is saying that if the capital expenditure growth is less than 15%, then it could be negative for the capital goods and the road infra companies. Then there are rural focused companies like Imami, Dabur, Jyoti Labs, Chambal Fertilizers, GSFC, M&M Finance and L&T Finance. So any increased allocation towards rural spending, agriculture spending, rural schemes would definitely be positive for these rural focused companies. Then there are housing finance companies like PNB Housing, LIC Housing, Awas Housing. All these stocks would remain in focus, because any increased allocation towards CLSS scheme, that is the housing scheme, or PMAY scheme would definitely be positive for this housing finance companies. Then there are oil marketing companies like IOCL, BPCL and HPCL, and these stocks would definitely remain in focus given the fact that they have incurred huge LPG subsidy losses in FY25. So any lower allocation towards subsidy, LPG subsidy would definitely be negative for the oil marketing companies. And lastly, it's Adani Green, Tata Power and Wari Renewables. All these stocks would remain in focus because government has clearly showed their focus or intent towards increasing solar energy. So any increased allocation towards rooftop solar would definitely be positive for Adani Power, Wari Renewables and Tata Power.
For that, Samit. So those are some of the stocks that you should look at, and some of them have already run up actually in anticipation. There's just about 13 minutes left for the speech to start. We're taking a very short break and coming right back. How do you set up for trade in this last bit before the speech? Stay tuned for that and more. This is the day that shapes the future of a billion dreams.
From the fields of agriculture to the backbone of defense.
From ambitious infrastructure projects to everyday tax policies.
Every decision counts.
How will this budget balance growth and fiscal prudence?
What will it mean for jobs and what will it mean for your portfolio?
Join us for the most comprehensive coverage of Budget 2025
as we decipher the impact
of this budget on you. STT. STT definitely needs to change.
Old tax regime.
The 1991 budget was truly a game changer.
I mean, the rest is history.
Union budget.
Budgets.
General elections.
Union budget.
Two more, Yashwant Sinha and P. Chidambaram.
Arun Jaitley.
Arun Jaitley, I'd have to say.
I think Manmohan Singh for sure because of the iconic 1991 budget speech.
STT. STT definitely needs to change because now if returns are not that good, it'll start pinching people.
Income tax.
I think income tax because that's what matters to me.
Old tax regime.
Depends. Old tax regime currently.
I would say healthcare and education.
I'd believe infra.
Oh, certainly more allocation towards infrastructure. That's what's keeping the wheels turning right now.
Game changer, but not in a positive way, was the budget when farm loans were waived off.
There are a couple of them actually. 1991, Manmohan Singh, that was the budget which opened up the economy. Then 97, Chidambaram, who reduced the tax rate from 40.
Welcome back. Thanks so much for tuning in, staying tuned to NDTV Profit. Now, this is something that has come up in conversation in the last 1 hour, 15 minutes. And that is it okay to miss the fisc glide path targets if the intent is to spur growth? And Mihir Vora, you look at these numbers very, very closely, right? The fisc deficit, the income that the government has, the fixed expenditures, etc. One, does the government have enough headroom for FY26, not just FY25 by the way, to keep that momentum on capex example and at the same time boost consumption? And if it does not, is it okay to miss the fisc deficit glide path target for FY26 if they are doing it in the right spaces, which makes the market believe that they are wanting to spur growth? And what would you have, even if they have the budget, or even if they have the numbers, is it prudent to do that or would you not want it?
See, I don't think the RBI and the government are in a mindset to deviate too much from the glide path that has been shown to the market, because I think we as a country are very conscious about the fact that we tried so hard to get into the global bond indices, and that does come with some kind of soft commitments and understandings about where the fiscal direction should go. So the mindset is not really to deviate, that's one. Having said that, if you look at the tax collections and if you introduce a little more discipline in the taxation regime, there is a scope for tax to GDP to go up. In spite of having introduced GST, etc., the tax to GDP ratio is creeping up very slowly. So there is a scope for better compliance, better this thing, not terrorism but compliance, right? There is scope there. So I'd rather that they focus on increasing the tax to GDP rather than increasing taxes. And if we can get a nominal GDP growth of closer to 12% rather than 10.5%, then there will be scope for extra spending, I would say.
Okay, Mr. Seta, just the same question to you, really.
Yeah. So I don't think they will want to miss the fiscal deficit number for next year as well.
Yeah.
Maybe year thereafter, because of the 8-pay commission, this, that, there might be some aberration. But at least for next year, I think they'll still stay with the fiscal deficit number. At the same time, I do feel that they will want to bring growth much higher than what we are currently seeing. And while it's a wish, I'm not sure whether it will happen. If it means that government capex, in order to be maintained, needs some revenue, I think the best course and the correct course for them to take would be more aggressive on the disinvestments. I think, while I'm not sure they will do it.
Believe it, sir.
Sorry?
While the market even believe that if they're aggressive, because they are not meeting the targets even for this year, right? Or the last year, or the year before that, what have you?
Yes. So the point that I'm trying to make is what they ought to do.
Okay.
And probably if they do this, they should not give up on infrastructure building, government capex, because that's what will crowd in even private investment.
Sure.
But giving up on growth would be a bad idea, because taxes will really come from growth as well. The buoyancy in taxes will come to a large extent also from growth. So I don't think they should sacrifice growth. They will not want to sacrifice fiscal deficit. So I am trying to say that if you sacrifice growth, in any case taxes will come down and fiscal deficit will be a problem. So you must maintain growth, and if that requires disinvestment, but capex, government capex has to be there. So that's the way I would feel they should balance their books. But government capex should not be sacrificed. Fiscal deficit they won't, and I think they should not. We've tasted the fruits of a good macro stable environment, and I don't think they'll want to give that up very easily.
Just some of the focus areas that we need to look at, and Mihir, we have 5 minutes to go for the speech, so let's get a little specific on the markets just for a bit. And we were speaking in the break about how a lot of people just don't want to trade on the budget day, but there are a lot of people who do, and many of them watching us right now. Thank you for all your views, even on our YouTube stream. Just trying to understand whether the typical rail, solar energy, defense push is something that is a safe play this morning.
100%, because these are structural plays and the direction is very clear, whether it's indigenization of defense manufacturing, whether it's the shift from coal and non-renewables to renewables. So those are structural changes and those are not going to go away. So irrespective of the budget, these are certain themes which are going to be there for the longer term, I would say.
Okay, and if the budget gives focus, that's an added impetus.
That's an added impetus. Absolutely.
Okay. So, well, watch out for that bucket, if you will, of pockets wherein there has been the continued focus and that continues too as well. Mr. Seta, you're not a markets person, but very, very quickly, if there is some tax changes, etc., in order to spur consumption, you think that would be a welcome move? And does that spur the sentiment around consumption?
Absolutely, I think so.
Okay.
Okay, so interesting piece on, and this budget important because the last budget was in July, and Mihir, you walked in and said budget phir se aa gaya itna jaldi. That sets up perfectly for this piece that our colleague Hiral has done, where she's tracked markets since the last budget in July and today. Important because what a change in mood since these two events. Take a look.
If we can just move to the key 9 aspects which the markets had considered, which the budget 2024 had considered, that will be key. Firstly, disappointed investors, as Neeraj also mentioned, however, rewarded some
taxpayers, right? So that was one of the key focus areas. But there were 9 things that Nirmala Sitharaman actually looked at. One was productivity and resilience with regards to agriculture. So schemes with agriculture that were announced. Employment and skilling was their next focus area. Moving on, the others were in terms of inclusive HR development and social justice, manufacturing and services where PLI schemes were announced to some extent. Urban development was the other aspect, and energy security with renewables was one of the focus areas. Infrastructure, which is the crux, capex has been slowing down. What do they do from here on? Innovation R&D was again what they focused on as well. And very lastly, if you see in terms of next generation reforms. Now, whether all of this has actually helped markets or not, absolutely not. Nifty, a downtick of 5% since the previous budget, where you had broader markets which actually went ahead and underperformed as well to the tune of almost around 7 to 9.5%. So that's the mid cap and the small cap underperformance. Now, very interesting. The performance tells you that the markets were not happy because all your domestic oriented sectors were the ones which have underperformed. From energy to oil and gas, real estate, PSU banks and FMCG, down to the tune of almost around 11 to 21% from the previous budget to now. What has outperformed? It's your export-oriented sectors, Nifty IT, Nifty Pharma, up to the tune of almost around 3 to 6%. So you clearly know that it's the domestic policies which have not really been working for India Inc. It's the export-oriented ones. And similar is the trend if you see in terms of gainers and losers. From a DV slab to Wipro, Bajaj Finance, Holdings and a Bharti Airtel, gains to the tune of almost 12 to 26% that did come in. What was losing? Adani Green did lose out. Yes, there was a Hindenburg impact coming in there. But you had a BHEL, IndusInd Bank, Tata Motors, JSW Energy, all in the range of around 30 to 36%, which were under pressure. Let's look at the broader markets. If you see Nifty 500, you have 366 stocks that have actually given negative returns since the previous budget out of Nifty 500. So that tells you the quantum of underperformance that has come in there. And if you talk about the mid-cap companies, BSE actually is outperformed with gains of nearly 2.3 times. But Lloyds Metal, Paytm, Coforge, Dixon, these are the ones which were losing to the tune of around 30 to 75%, gaining, I beg your pardon, to the tune of 30 to 75%. Whereas names like Cochin Shipyard, Vodafone Idea, MRPL, SJVN, Exide Industries, all down in the range of around 35 to 45%. Small caps, you have Amber Enterprises, Piramal, KFin Tech, Aster DM, MCX, all up in the range of 40 to 50%. Whereas if you see in terms of the losers, if you can have that slide, there you go. Honasa, Sterling, Chennai Petro, Tanla, Jupiter, these were the names which were losing out. So that's in terms of the performance, but let's also look at few of the other reasons which impacted margins, the markets. You had the largest ever FI sell-off that came in to the tune of almost around 2.7 lakh crore. Secondly, you have analysts who have gone ahead and cut estimates as well with regards to earnings for FY25 and 26. Apart from that, if you talk about the geopolitical concerns, they have been looming on the domestic markets. And very lastly, if you see in terms of the election year, that has seen lower government spends.
Okay, first visuals coming in from Parliament. And the customary noise around it as well. Remember, it's also the start of the budget session. Honorable Speaker in the chair, let's listen in.
में आपको पर्याप्त अवसर दूंगा। मेरा आपसे निवेदन है, नहीं माननीय अखिलेश जी, आपने संसद की मर्यादा को आप बना के रखे हैं। कभी बजट भाषण के अंदर इस तरीके का नहीं हुआ, ये उचित नहीं है, ये उचित नहीं है। अखिलेश जी प्लीज, मैं आपको मौका दूंगा राज्यपाल अभिभाषण पे, प्लीज नो।
household sentiments, and E, enhance spending power of India's rising middle class. Together, we embark on a journey to unlock our nation's tremendous potential for greater prosperity and global positioning under the leadership of Honorable Prime Minister Shri Narendra Modi. As we complete the first quarter of the 21st century, continuing geopolitical headwinds suggest lower global economic growth over the medium term. However, our aspiration for a Vikasit Bharat inspires us, and the transformative work we have done during our government's first 2 terms guides us to march forward resolutely. Our economy is the fastest growing among all major economies. Our development track record for the past 10 years and structural reforms have drawn global attention. Confidence in India's capability and potential has only grown in this period. We see the next 5 years as a unique opportunity to realize Sabka Vikas, stimulating balanced growth of all regions. The great Telugu poet and playwright Gurujada Apparao had said, "Deshamante matti kadoy, deshamante manushuloy," meaning a country is not just its soil, a country is its people. In line with this, for us, Vikasit Bharat encompasses zero poverty, 100% quality good school education, access to high quality, affordable and comprehensive health care, 100% skilled labor with meaningful employment, 70% women in economic activities, and farmers making our country the food basket of the world. In this budget, the proposed development measures span 10 broad areas focusing on Garib, youth, Annadata and Nari, spurring agricultural growth and productivity, building rural prosperity and resilience, taking everyone together on an inclusive growth path, boosting manufacturing and furthering Make in India, supporting MSMEs, enabling employment-led development, investing in people, economy and innovation, securing energy supplies, promoting exports and nurturing innovation. For this journey of development, our 4 powerful engines are agriculture, MSME, investments and exports. The fuel, our reforms, our guiding spirit, inclusivity, and the destination, Vikasit Bharat. This budget aims to initiate transformative reforms across 6 domains. During the first 5 years, these will augment our growth potential and global competitiveness. The domains are taxation, power sector, urban development, mining, financial sector, and regulatory reforms. Agriculture as the first engine. Now I move to specific proposals, beginning with agriculture as the first engine. Prime Minister Dhan Dhanya Krishi Yojana, developing agri-districts program. Motivated by the success of the aspirational district program, our government will undertake a Prime Minister Dhan Dhanya Krishi Yojana in partnership with states. Through the convergence of existing schemes and specialized measures, the program will cover 100 districts with low productivity, moderate crop intensity, and below average credit parameters. It aims to 1. Enhance agricultural productivity, 2. Adopt crop diversification and sustainable agricultural practices, 3. Augment post-harvest storage at the panchayat and block level, 4. Improve irrigation facilities, and 5. Facilitate availability of long-term and short-term credit. This program is likely to help 1.7 crore farmers. Building rural prosperity and resilience. A comprehensive multi-sectoral rural prosperity and resilience program will be launched in partnership with the states. This will address underemployment in agriculture through skilling, investment, technology, and invigorating the rural economy. The goal is to generate ample opportunities in rural areas so that migration is an option but not a necessity. The program will focus on rural women, young farmers, rural youth, marginal and small farmers, and landless families. The details are in Annexure A. Domestic best practices will be incorporated, and appropriate technical and financial assistance will be sought from multilateral development banks. In phase 1, 100 developing agri-districts will be covered. Atmanirbharta in pulses. Our government is implementing the National Mission for Edible Oil Seed for achieving Atmanirbharta in edible oils. Our farmers have the capability to grow enough for our needs and more. 10 years ago, we made concerted efforts and succeeded in achieving near self-sufficiency in pulses. Farmers responded to the need by increasing the cultivated area by 50%, and government arranged for procurement and remunerative prices. Since then, with rising incomes and better affordability, our consumption of pulses has increased significantly. Our government will now launch a 6-year mission for Atmanirbharta in pulses with a special focus on Tuar, Urad and Masoor. Details are in Annexure B. Central agencies such as NAFED and NCCF will be ready to procure these 3 pulses as much as offered during the next 4 years from farmers who register with these agencies and enter into agreements. Comprehensive program for vegetables and fruits. It is encouraging that our people are increasingly becoming aware of their nutritional needs. It is a sign of a society becoming healthier. With rising income levels, the consumption of vegetables, fruits, and Shri Anna is increasing significantly. A comprehensive program to promote production, efficient supplies, processing, and remunerative prices for farmers will be launched in partnership with the states. Appropriate institutional mechanisms for implementation and participation of farmer producer organizations and cooperatives will be set up. Makhana board in Bihar. For this, there is a special opportunity for the people of Bihar. A Makhana board will be established in the state to improve production, processing, value addition, and marketing of Makhana. The people engaged in these activities will be organized into FPOs. The board will provide hand-holding and training support to Makhana farmers and will also work to ensure they receive the benefits of all relevant government schemes. A national mission on high-yielding seeds will be launched, aimed at 1. Strengthening research ecosystem, 2. Targeted development and propagation of seeds with high yield, pest resistance, and climate resilience, and 3. Commercial availability of more than 100 seed varieties released since July 2024. India ranks 2nd largest globally in fish production and aquaculture. Seafood exports are valued at 60,000 crore rupees. To unlock the untapped potential of the marine sector, our government will bring in an enabling framework for sustainable harnessing of fisheries from Indian Exclusive Economic Zone and high seas, with a special focus on the Andaman and Nicobar and Lakshadweep Islands. For the benefit of lakhs of cotton growing farmers, I am pleased to announce a mission for cotton productivity. This 5-year mission will facilitate significant improvements in productivity and sustainability of cotton farming and promote extra long staple cotton varieties. The best of science and technology support will be provided to farmers. Aligned with our integrated 5F vision for the textile sector, this will help in increasing incomes of the farmers and ensure a steady supply of quality cotton for rejuvenating India's traditional textile sector. Kisan credit cards facilitate short-term loans for 7.7 crore farmers, fishermen, and dairy farmers. The loan limit under modified interest subvention scheme will be enhanced from 3 lakh rupees to 5 lakh rupees for loans taken through the KCC. For Atmanirbharta in urea production, our government had reopened 3 dormant urea plants in the eastern region. To further augment urea supply, a plant with annual capacity of 12.7 lakh metric tons will be set up at Namrup in Assam. India Post, with 1.5 lakh rural post offices, complemented by the India Post Payment Bank and a vast network of 2.4 lakh Dak Sevaks, will be repositioned to act as a catalyst for the rural economy. Details are at Annexure C. India Post will also be transformed as a large public logistics organization. This will meet the rising needs of Vishwakarmas, new entrepreneurs, women, self-help groups, MSMEs, and the large business organizations. Our government will provide support to NCDC for its lending operations for the cooperative sector. MSMEs as the second engine. Now I move to MSMEs as the second engine, which encompasses manufacturing and services with a focus on MSMEs numbering 5.7 crores. Currently, over 1 crore registered MSMEs, employing 7.5 crore people and generating 36% of our manufacturing, have come together to position India as a global manufacturing hub. With their quality products, these MSMEs are responsible for 45% of our exports. To help them achieve higher efficiencies of scale, technological upgradation, and better access to capital, the investment and turnover limits for classification of all MSMEs will be enhanced to 2.5 and 2 times respectively. This will give them the confidence to grow and generate employment for our youth. The details are given in Annexure D. To improve access to credit, the credit guarantee cover will be enhanced. First, for micro and small enterprises from 5 crore to 10 crore rupees, leading to additional credit of 1.5 lakh crores in the next 5 years. Second, for startups from 10 crore rupees to 20 crore rupees, with the guarantee fee being moderated to 1% for loans in 27 focus sectors which are important for Atmanirbhar Bharat. And for well-run exporter MSMEs, for term loans up to 20 crore rupees. Also for the micro enterprises, we will introduce customized credit cards with a 5 lakh rupee limit for micro enterprises registered on Udyam portal. In the first year, 10 lakh such cards will be issued. Fund of funds for startups. The Alternate Investment Fund, AIFs, for startups have received commitments of more than 91,000 crores. rupees. These are supported by the fund of funds set up with the Government of India's contribution of 10,000 crore rupees. Now, a new fund of funds with expanded scope and a fresh contribution of another 10,000 crore rupees will be set up. A new scheme will be launched for 5 lakh women, scheduled castes and scheduled tribes, first-time entrepreneurs. This will provide term loans up to 2 crore rupees during the next 5 years. The scheme will incorporate lessons from the successful Stand Up India scheme. Online capacity building for entrepreneurship and managerial skills will also be organized. Measures for labor-intensive sectors. To promote employment and entrepreneurship opportunities in labor-intensive sectors, our government will undertake specific policy and facilitation measures. To enhance the productivity, quality, and competitiveness of India's footwear and leather sector, a focused product scheme will be implemented. The scheme will support design capacity, component manufacturing, and machinery required for production of non-leather quality footwear, besides the support for leather footwear and products. The scheme is expected to facilitate employment for 22 lakh persons, generate over 4 lakh crore rupees, and exports of over 1.1 lakh crore rupees. Measures for the toys sector. Building on the National Action Plan for Toys, we will implement a scheme to make India a global hub for toys. The scheme will focus on development of clusters, skills, and a manufacturing ecosystem that will create high-quality, unique, innovative, and sustainable toys that will represent the Made in India brand. Support for food processing. In line with our commitment towards Purvodaya, we will establish a National Institute of Food Technology, Entrepreneurship and Management in Bihar. The institute will provide a strong fillip to food processing activities in the entire eastern region. This will result in 1. Enhanced income for the farmers through value addition to their produce, and 2. Skilling entrepreneurship and employment opportunities for the youth. Manufacturing mission, furthering Make in India. Our government will set up a national manufacturing mission covering small, medium, and large industries for furthering Make in India by providing policy support, execution roadmaps, governance, and monitoring framework for central ministries and states. Details are in Annexure E. Given our commitment to climate-friendly development, the mission will also support clean tech manufacturing. This will aim to improve domestic value addition and build our ecosystem for solar PV cells, EV batteries, motors and controllers, electrolyzers, wind turbines, very high voltage transmission equipment, and grid scale batteries. Investment as the third engine. Now I move to investment as the third engine, which encompasses investing in people, investing in the economy, and investing in innovation. Investing in people. Saksham Anganwadi and Poshan 2.0. Saksham Anganwadi and Poshan 2.0 program provides nutritional support to more than 8 crore children, 1 crore pregnant women and lactating mothers all over the country, and about 20 lakh adolescent girls in aspirational districts and the Northeast region. The cost norms for these nutritional support will be enhanced appropriately. Atal Tinkering Labs. 50,000 Atal Tinkering Labs will be set up in government schools in the next 5 years to cultivate the spirit of curiosity and innovation and foster a scientific temper among young minds. Broadband connectivity to government secondary schools and PHCs. Broadband connectivity will be provided to all government secondary schools and primary health centers in rural areas under the BharatNet project. Bharatiya Bhasha Pustak scheme. We propose to implement a Bharatiya Bhasha Pustak scheme to provide digital form Indian language books for schools and for higher education. This aims to help students understand their subjects better and in their language. National Centers of Excellence for Skilling. Building on the initiative announced in the July 24 budget, 5 national centers of excellence for skilling will be set up with global expertise and partnerships to equip our youth with the skills required for Make for India, Make for the World manufacturing. The partnership will cover curriculum design, training of trainers, and a skills certification framework and periodic reviews. Expansion of capacity in IITs. Total number of students in 23 IITs has increased 100% from 65,000 to 1.35 lakh in the past 10 years. Additional infrastructure will be created in the 5 IITs started after 2014 to facilitate education for 6,500 more students. Hostel and other infrastructure capacity at IIT Patna will also be expanded. Center of Excellence. Center of Excellence in AI for Education. I had announced 3 centers of excellence in artificial intelligence for agriculture, health, and sustainable cities in 2023. Now a center of excellence in artificial intelligence for education will be set up with a total outlay of 500 crores. Expansion of medical education. Our government has added almost 1.1 lakh undergraduate and postgraduate medical education seats in 10 years, an increase of 130%. In the next year, 10,000 additional seats will be added in medical colleges and hospitals towards the goal of adding 75,000 seats in the next 5 years. Daycare cancer centers in all district hospitals. Our government will facilitate setting up of daycare cancer centers in all district hospitals in the next 3 years. 200 centers will be established in 25-26 itself. Strengthening urban livelihoods. Our government has been giving priority to assisting urban poor and vulnerable groups. A scheme for socio-economic upliftment of urban workers will be implemented to help them improve their incomes, have sustainable livelihoods, and a better quality of life. PM Swanidhi scheme has benefited more than 68 lakh street vendors, giving them respite from high-interest informal sector loans. Building on this success, the scheme will be revamped with enhanced loans from banks, UPI-linked credit cards with 30,000 rupees limit, and capacity building support. Social Security scheme for welfare of online platform workers. Gig workers of online platforms provide great dynamism to the new age services economy. Recognizing their contribution, Our government will arrange for their identity cards and registration on the e-Shram portal. They will be provided healthcare under PM Jan Arogya Yojana. This measure is likely to assist nearly 1 crore gig workers. Investing in the economy, public-private partnership in infrastructure. Each infrastructure-related ministry will come up with a 3-year pipeline of projects that can be implemented in PPP mode. States will also be encouraged to do so and can seek support from the India Infrastructure Project Development Fund, which is a scheme to prepare PPP proposals. Support to states for infrastructure. An outlay of 1.5 lakh crore is proposed for the 50-year interest-free loans to states for capital expenditure and incentives for reforms. Building on the success of the first asset monetization plan announced in 2021, the second plan for 2025 to 30 will be launched to plow back capital of 10 lakh crore in new projects. Regulatory and fiscal measures will be fine-tuned to support the plan. Jal Jeevan Mission. Since 2019, 15 crore households, representing 80% of India's rural population, have been provided access to portable tap water connections. To achieve 100% coverage, I am pleased to announce the extension of this mission until 2028 with an enhanced total outlay. The mission's focus will be on the quality of infrastructure and O&M of rural piped water supply schemes through Jan Bhagidari. A separate MOU or separate MOUs will be signed with the states and union territories to ensure sustainability and citizen-centric water services delivery. Urban sector reforms. Building on the July budget proposals, urban sector reforms related to governance, municipal services, urban land and planning will be incentivized. Urban Challenge Fund. The government will set up an urban challenge fund of 1 lakh crore rupees to implement the proposals for cities as growth hubs, creative redevelopment of cities, and for water and sanitation purposes announced in the July budget. This fund will finance up to 25% of the cost of bankable projects, with a stipulation that at least 50% of the cost is funded from bonds, bank loans, and PPPs. An allocation of 10,000 crore is proposed in 2025-26. Power sector reforms. We will incentivize electricity distribution reforms and augmentation of intra-state transmission capacity by states. This will improve financial health and capacity of electricity companies. Additional borrowing of 0.5% of GSDP will be allowed to states contingent on these reforms. Nuclear energy mission for Vikasit Bharat. Development of at least 100 gigawatt of nuclear energy by 2047 is essential for our energy transition efforts. For an active partnership with the private sector towards this goal, amendments to the Atomic Energy Act and the Civil Liability for Nuclear Damage Act will be taken up. A nuclear energy mission for research and development of small modular reactors with an outlay of 20,000 crore will be set up. At least 5 indigenously developed small modular reactors will be operationalized by 2033. Shipbuilding. The shipbuilding financial assistance policy will be revamped to address cost disadvantages. This will also include credit notes for shipbreaking in Indian yards to promote the circular economy. Large ships above a specified size will be included in the infrastructure harmonized master list. Shipbuilding clusters will be facilitated to increase the range, categories, and capacity of ships. This will include additional infrastructure, facilities, skilling, and technology to develop the entire ecosystem. Maritime Development Fund. For long-term financing for the maritime industry, a Maritime Development Fund with a corpus of 25,000 crore rupees will be set up. This will be for distributed support and promoting competition. This will have up to 49% contribution by the government, and the balance will be mobilized from ports and from private sector. UDAN regional connectivity schemes. UDAN has enabled 1.5 crore middle-class people to meet their aspirations for speedier travel. The scheme has connected 88 airports, and operationalized 619 routes. Inspired by that success, a modified UDAN scheme will be launched to enhance regional connectivity to 120 new destinations and carry 4 crore passengers in the next 10 years. 4 crore additional passengers in the next 10 years. The scheme will also support helipads and smaller airports in hilly, aspirational, and northeast regional districts. Greenfield airports will be facilitated in Bihar to meet the future needs of the state. These will be in addition to the expansion of the capacity of Patna Airport and a brownfield airport in Beta. Western Kosi Canal project in Mithilanchal. Financial support will be provided for the Western Kosi Canal ERM project, benefiting a large number of farmers, cultivating over 50,000 hectares of land in the Mithilanchal region of Bihar. Mining sector reforms. Mining sector reforms, including those for minor minerals, will be encouraged through sharing of best practices and institutions of a state mining index. A policy for recovery of critical minerals from tailings will be brought out. Under the special window for affordable and mid-income housing, SWAMI, 50,000 dwelling units in stressed housing projects have been completed and keys handed over to home buyers. Another 40,000 units will be completed in 2025, further helping middle-class families who are paying EMIs on loans taken for apartments while also paying rent for their current dwellings. Building on this success, SWAMI Fund 2 will be established as a blended finance facility with contribution from the government, banks, and private investors. This fund of 15,000 crore rupees will aim for expeditious completion of another 1 lakh units. PM Gati Shakti data for private sector. For furthering PPPs and assisting the private sector in project planning, access to relevant data and maps from the PM Gati Shakti portal will be provided. Tourism for employment-led growth. Top 50 tourist destination sites in the country will be developed in partnership with states through a challenge mode. Land for building key infrastructure will have to be provided by the states. Hotels in these destinations will be included in the infrastructure harmonized list. The following measures will be taken for facilitating employment-led growth. Organizing intensive skill development programs for our youth, including in institutes of hospitality management. Providing mudra loans for homestays. Improving ease of travel and connectivity to tourist destinations. Providing performance-linked incentives to states for effective destination management, including tourist amenities, cleanliness, and marketing efforts. And introducing streamlined e-visa facilities along with visa fee waivers for certain tourist groups. Continuing with the emphasis on places of spiritual and religious significance, in the July budget, there will be a special focus on destinations related to the life and times of Lord Buddha. Medical tourism and heal in India. Medical tourism and heal in India will be promoted in partnership with the private sector, along with capacity building and easier visa norms. Investing in innovation. To implement private sector-driven research, development, and innovation initiatives announced in the July budget, I am now allocating 20,000 crore rupees for this purpose. A deep tech fund of funds will also be explored to catalyze the next generation startups as a part of this initiative. In the next 5 years, under the PM Research Fellowship Scheme, we will provide 10,000 fellowships for technological research in IITs and IISc with enhanced financial support. The second gene bank with 10 lakh germplasm lines will be set up for future food and nutritional security. This will provide conservation support to both public and private sectors for genetic resources. We will start a national geospatial mission to develop foundational geospatial infrastructure and data. Using PM Gati Shakti, this mission will facilitate modernization of land records, urban planning, and design of infrastructure projects. A Gyan Bharatam mission for survey, documentation, and conservation of our manuscript heritage with academic institutions, museums, libraries, and private collectors will be undertaken to cover more than 1 crore manuscripts. We will set up a national digital repository of Indian knowledge systems for knowledge sharing. Now I move to exports as the fourth engine. We will set up an export promotion mission with sectoral and ministerial targets driven jointly by the Ministries of Commerce, MSME, and Finance. It will facilitate easy access to export credit, cross-border factoring support, support to MSMEs to tackle non-tariff measures in overseas markets. A digital public infrastructure, Bharat Trade Net, for international trade will be set up as a unified platform for trade documentation and financing solutions. This will complement the Unified Logistics Interface platform. The BTN will be aligned with international practices. Support will be provided to develop domestic manufacturing capacities for our economy's integration with global supply chains. Sectors will be identified based on objective criteria. Facilitation groups with participation of senior officers and industry representatives will be formed for select products and supply chains. Through this, there are huge opportunities related to Industry 4.0, which needs high skills and talent. Our youth have both. Our government will support the domestic electronic equipment industry to leverage this opportunity for the benefit of our youth. A national framework will be formulated as guidance to states for promoting global capability centers in emerging Tier 2 cities. This will suggest measures for enhancing availability of talent and infrastructure, building bylaw reforms, and mechanisms for collaboration with industry. Our government will facilitate upgradation of infrastructure and warehousing for air cargo, including high-value perishable horticultural produce. Cargo screening and customs protocol will be streamlined and made user-friendly. Reforms as the fuel. Over the past 10 years, our government has implemented several reforms for convenience of taxpayers, such as faceless assessment, 2, taxpayer charter, 3, faster returns, 4, almost 99% returns being on self-assessment, and 5, Vivad Se Vishwas scheme. Continuing these efforts, I reaffirm the commitment of the tax department to trust first, scrutinize later. I also propose to introduce the new income tax bill next week. I will detail the indirect tax reforms and changes in direct taxes in Part B. Financial sector reforms. The FDI limit for the insurance sector will be raised from 74 to 100%. This enhanced limit will be available for those companies which invest the entire premium in India. The current guardrails and conditionalities associated with foreign investment will be reviewed and simplified. The services of India Post Payment Bank will be deepened and expanded in rural areas. NABFID will set up a partial credit enhancement facility for corporate bonds for infrastructure. Public sector banks will develop Grameen Credit Score framework to serve the credit needs of SHG members and people in rural areas. A forum for regulatory coordination and development of pension products will be set up. To implement the earlier announcement on simplifying the KYC processes, the revamped Central KYC Registry will be rolled out in 2025. We will also implement a streamlined system for periodic updating. Requirements and procedures for speedy approval of company mergers will be rationalized. The scope for fast-track mergers will also be widened and the process made simpler. As proposed in the interim budget, we signed bilateral investment treaties with 2 countries in 2024 to encourage sustained foreign investment, and in the spirit of First Develop India, the current model BIT will be revamped and made more investor-friendly. In the last 10 years, in several aspects, including financial and non-financial, our government has demonstrated a steadfast commitment to ease of doing business. We are determined to ensure that our regulations must keep up with technological innovations and global policy developments. A light-touch regulatory framework based on principles and trust will unleash productivity and employment. Through this framework, we will update regulations that were made under old laws. To develop this modern, flexible, people-friendly, and trust-based regulatory framework appropriate for the 21st century, I propose 4 specific measures. A high-level committee for regulatory reforms will be set up for a review of all non-financial sector regulations, certifications, licenses, and permissions. The committee will be expected to make recommendations within a year. The objective is to strengthen trust-based economic governance and take transformational measures to enhance ease of doing business, especially in matters of inspection and compliances. States will be encouraged to join in this endeavor. An investment friendliness index of states will be launched in 2025 to further the spirit of competitive, cooperative federalism. Under the Financial Stability and Development Council, a mechanism will be set up to evaluate impact of the current financial regulations and subsidiary instructions. It will also formulate a framework to enhance their responsiveness and development of the financial sector. In the Jan Vishwas Act 2023, more than 180 legal provisions were decriminalized. Our government will now bring up the Jan Vishwas Bill 2.0 to decriminalize more than 100 provisions in various laws. I now move to fiscal policy. In the July budget, I had committed to staying the course for fiscal consolidation. Our endeavor will be to keep the fiscal deficit each year such that central government debt remains on a declining path as a percentage of the GDP. The roadmap for the next 6 years has been detailed in the FRBM statement. Revised estimates for 2024-25. The revised estimate of the total receipts other than borrowings is 31.47 lakh crore rupees, of which the net tax receipts are 25.57 lakh crore rupees. The revised estimate of the total expenditure is 47.16 lakh crore rupees, of which the capital expenditure is about 10.18 lakh crore rupees. The revised estimate of the fiscal deficit is 4.8% of the GDP. Budget estimates for 25-26. Coming to 25-26, the total receipts other than borrowings and total expenditure are estimated at 34.96 lakh crore rupees and 50.65 lakh crore rupees respectively. The net tax receipts are estimated at 28.37 lakh crore rupees. The fiscal deficit is estimated to be 4.4% of GDP. To finance the fiscal deficit, the net market borrowings from dated securities are estimated at 11.54 lakh crore. The balance financing is expected to come from small savings and other sources. The gross market borrowings are estimated at 14.82 lakh crore rupees. I will now move to Part B. Indirect taxes. My proposals relating to customs aim to rationalize tariff structure and address duty inversion. These will also support domestic manufacturing and value addition, promote exports, facilitate trade, and provide relief to common people. Rationalization of customs tariff structure for industrial goods. As a part of comprehensive review of customs rate structure announced in July 2024 budget, I propose to 1. Remove 7 tariff rates. This is over and above the 7 tariff rates removed in 23-24 budget. After this, there will be only 8 remaining tariff rates, including 0 rate. 2. Apply appropriate cess to broadly maintain effective duty incidence, except on a few items where such incidence will reduce marginally. 3. Levy not more than 1 cess or surcharge. Therefore, I propose to exempt social welfare surcharge on 82 tariff lines that are subject to a cess. I shall now take up sector-specific proposals. To provide relief to patients, particularly those suffering from cancer, rare diseases, and other severe chronic diseases, I propose to add 36 life-saving drugs and medicines to the list of medicines fully exempted from basic custom duty. I also propose to add 6 life-saving medicines to the list attracting concessional custom duty of 5%. Full exemption and concessional duty will also respectively apply on the bulk drugs for manufacture of the above. Specified drugs and medicines under patient assistance programs run by the pharmaceutical companies are fully exempt from BCD, provided the medicines are supplied free of cost to the patients. I propose to add 37 more medicines along with 13 new patient assistance programs. Support to domestic manufacturing and value addition. Critical minerals. In the July 2024 budget, I had fully exempted BCD on 25 critical minerals that are not domestically available. I had also reduced BCD of 2 other such minerals to provide a major fillip to their processing, especially by MSMEs. Now, I propose to fully exempt cobalt powder and waste, the scrap of lithium-ion battery, lead, zinc, and 12 more critical minerals. This will help secure the availability for manufacturing in India and promote more jobs for our youth. To promote domestic production of technical textile products such as agro-textiles, medical textiles, and geotextiles at competitive prices, I propose to add 2 more types of shuttle-less looms to the list of fully exempted textile machinery. I also propose to revise the BCD rate on knitted fabrics covered by 9 tariff lines from 10 or 20 to 20% or 115 rupees per kg, whichever is higher. Electronic goods. In line with our Make in India policy and to rectify inverted duty structure, I propose to increase the BCD on interactive flat panel display from 10% to 20% and reduce the BCD to 5% on open cell and other components. In 23-24 budget, for the manufacture of open cells of LCD, LED TVs, I had reduced the BCD on parts of open cells from 5% to 2.5%. To further boost the manufacture of such open cells, the BCD on these parts will now stand exempted. Lithium-ion battery. To the list of exempted capital goods, I propose to add 35 additional capital goods for EV battery manufacturing and 28 additional capital goods for mobile phone battery manufacturing. This will boost domestic manufacture of lithium-ion batteries, both for mobile phones and for electric vehicles. Shipping sector. Considering that shipbuilding has a long gestation period, I propose to continue the exemption of BCD on raw materials, components, consumables, or parts for the manufacture of ships for another 10 years. I also propose the same dispensation for shipbreaking to make it more competitive. Telecommunication. To prevent classification disputes, I propose to reduce the BCD from 20% to 10% on carrier-grade Ethernet switches to make it at par with non-carrier-grade Ethernet switches. Export promotion. To facilitate exports of handicrafts, I propose to extend the time period for export from 6 months to 1 year, further extendable by another 3 months if required. I also propose to add 9 items to the list of duty-free inputs. Leather sector. I propose to fully exempt BCD on wet blue leather to facilitate imports for domestic value addition and employment. I also propose to exempt crust leather from 20% export duty to facilitate exports by small tanners. Marine products. To enhance India's competitiveness in the global seafood market, I propose to reduce BCD from 30% to 5% on frozen fish paste, surimi, for manufacture and export of its analog products. I also propose to reduce BCD from 15% to 5% on fish hydrolysates for manufacture of fish and shrimp feed. In July 2024 budget, to promote development of domestic MROs for aircraft and ships, I had extended the time limit for export of foreign origin goods that were imported for repairs from 6 months to 1 year and further extendable by 1 year. I now propose to extend the same dispensation for railway goods. Time limit for provisional assessment. Presently, the Customs Act 1962 does not provide any time limit to finalize provisional assessments, leading to uncertainty and cost to trade. As a measure of promoting ease of doing business, I propose to fix a time limit of 2 years, extendable by a year, for finalizing the provisional assessment. I propose to introduce a new provision that will enable importers or exporters, after clearance of goods, to voluntarily declare material facts and pay duty with interest but without penalty. This will incentivize voluntary compliance. However, this will not apply in cases where department has already initiated audit or investigation proceedings. For industry to better plan their imports, I propose to extend the time limit for the end use of imported inputs in the relevant rules from 6 months to 1 year. This will provide operational flexibility in view of cost and uncertainty of supply. Further, such importers will now have to file only quarterly statements instead of a monthly statement. I now come to my direct tax proposals. In Part A, I have briefly underlined taxation reforms as one of key reforms to realize our vision of Vikasit Bharat. In respect of criminal law, our government had earlier ushered in Bharatiya Nyaya Sanhita, replacing Bharatiya Danda Sanhita. I am happy to inform this august House and the country that for new income tax bill will carry forward the same spirit of Nyaya in its drafting as well. The new bill will be clear and direct in text, with close to half of the present law in terms of both chapters and words. It will be simple to understand for taxpayers and tax administrators, leading to tax certainty and reduced litigation. Reforms, however, are not a destination. They are means to achieve good governance for our people and economy. Providing good governance primarily involves being responsive. The Tirukkural captures this in verse 542, which reads, "Vaanokki vaazhum ulagallam, mannavan kol nokki vaazhum kudi," meaning, just as the living beings live expecting rains, citizens live expecting good governance. Our government is committed to keeping an ear to the ground and a finger on the pulse and responding while balancing our national building efforts. The following measures will detail just how our government will, under the guidance of PM Modi, has taken steps to understand and address. I repeat that sentence, sir. The following measures will detail just how our government, under the guidance of PM Modi, has taken steps to understand and address the needs voiced by our citizens. My tax proposals are guided by this spirit. The objectives of my proposals are as follows. Personal income tax reforms with special focus on middle class. Rationalization of TDS and TCS for easing difficulties. Encouraging voluntary compliance. Reducing compliance burden. Ease of doing business, employment and investment. I will come to my proposal on personal income tax towards the end. TDS and TCS, rationalization for easing difficulties. I propose to rationalize tax deduction at source, TDS, by reducing the number of rates and thresholds above which TDS is deducted. Further, threshold amounts for tax deduction will be increased for better clarity and uniformity. The limit for tax deduction on interest for senior citizens is being doubled from the present 50,000 rupees to 1 lakh rupees. Similarly, the annual limit of 2.40 lakh rupees for TDS on rent is being increased to 6 lakh rupees. This will reduce the number of transactions liable to TDS, thus benefiting small taxpayers receiving small payments. The threshold to collect tax at source, the TCS, on remittances under RBI's liberalized remittance scheme, the LRS, is proposed to be increased from 7 lakh to 10 lakhs. I also propose to remove TCS on remittances for education purposes, where such remittances is out of a loan taken from a specified financial institution. Both TDS and TCS are being applied on any transaction related to sale of goods. To prevent such compliance difficulties, I propose to omit the TCS. I also propose that the provisions of the higher TDS deduction will now apply only in non-PAN cases. In July 2024, the delay for payment of TDS up to the due date of filing statement was decriminalized. I propose to provide the same relaxation to TCS provisions as well. The government under the leadership of Prime Minister Modi believes in Sabka Saath, Sabka Vikas, Sabka Vishwas and Sabka Prayas. In line with this, we brought in updated return facility in 2022 for voluntary compliance by taxpayers who had omitted to report their correct income. Our trust in taxpayers was proved right. Nearly 90 lakh taxpayers voluntarily updated their incomes by paying additional tax. Taking this trust further, I now propose to extend the time limit to file updated returns for any assessment year from the current limit of 2 years to 4 years. I propose to reduce the compliance burden for small charitable trusts and institutions by increasing their period of registration from 5 years to 10 years. It is also proposed that disproportionate consequences do not arise for minor defaults such as incomplete applications filed by charitable entities. Presently, taxpayers can claim the annual value of self-occupied properties as nil only on the fulfillment of certain conditions. Considering the difficulties faced by taxpayers, it is proposed to allow the benefit of 2 such self-occupied properties without any condition. To streamline the process of transfer pricing and to provide an alternative to yearly examination, I propose to introduce a scheme for determining arm's length price of international transaction for a block period of 3 years. This will be in line with global best practices. With a view to reduce litigation and provide certainty in international taxation, the scope of safe harbor rules is being expanded. A number of senior and very senior citizens have very old national savings schemes accounts. As interest is no longer payable on such accounts, I propose to exempt withdrawals made from NSS by individuals on or after 29th August 2024. I am also proposing to allow similar treatment to NPS Vatsalya accounts as is available to normal NPS accounts subject to overall limits. In my speech in July 2024, I had promised that all processes, including giving effect to appellate orders, shall be digitalized and made paperless over the next 2 years. So I'm happy to announce that digitalization is being made operational now. In July 2024, we brought in the Vivad Se Vishwas scheme to resolve income tax disputes pending in appeal. The scheme has received a great response, with nearly 33,000 taxpayers having availed of the scheme to settle their disputes. I have a few proposals to promote investment and employment. It is proposed to provide a presumptive taxation regime for non-residents who provide services to a resident company that is establishing or operating an electronics manufacturing facility. I further propose to introduce a safe harbor for tax certainty for non-residents who store components for supply to specified electronics manufacturing units. Presently, the tonnage tax scheme is available only to sea-going ships. The benefits of existing tonnage tax scheme are proposed to be extended to inland vessels registered under the Indian Vessels Act 2021 to promote inland water transport in the country. Extension for incorporation of startups. We continue to support the Indian startup ecosystem. I propose to extend the period of incorporation by 5 years to allow the benefit available to startups which are incorporated before 1/4/2030. In order to attract and promote additional activities in the IFSC, I am inter alia proposing specific benefits to ship leasing units, insurance offices, and treasury centers of global companies which are set up in IFSC. Further, to claim benefits, the cutoff date for commencement in IFSC has also been extended by 5 years to 31/3/2030. Category 1 and Category 2 AIFs are undertaking investments in infrastructure and other such sectors. I propose to provide certainty of taxation to these entities on the gains from securities, to promote funding from sovereign wealth funds and pension funds to the infrastructure sector. I propose to extend the date of making an investment by 5 more years up to 31st March 2030. Personal income tax reforms with special focus on middle class. Democracy, demography, and demand are the key support pillars in our journey towards Vikasit Bharat. The middle class provides strength for India's growth. This government, under the leadership of Prime Minister Modi, has always believed in the admirable energy and ability of the middle class in nation building. In recognition of their contribution, we have periodically reduced their tax burden. Right after 2014, the nil tax slab was raised to 2.5 lakhs of rupees, which was further raised to 5 lakh rupees in 2019. and to 7 lakh rupees in 2023. This is reflective of our government's trust on the middle class taxpayers. I am now happy to announce that there will be no income tax payable up to income of 12 lakh rupees. So, average income of 1 lakh per month other than the special rate income such as capital gains under the new regime. This limit will be 12.75 lakh for salaried taxpayers due to the standard deduction of 75,000. Slabs and rates are being changed across the board to benefit all taxpayers. The new structure will substantially reduce the taxes of the middle class and leave more money in their hands, boosting household consumption, savings, and investment. In the new tax regime, I propose to revise tax rate structures as follows: 0 to 4 lakh rupees nil, 4.8 lakh rupees to 4 to 8 lakh rupees 5%, 8 to 12 lakh rupees 10%, 12 to 16 lakh rupees 15%, 16 to 20 lakh rupees 20%, 20 to 24 lakh rupees 25%, and above 24 lakh rupees 30%. To taxpayers up to 12 lakh of normal income other than special rate income such as capital gains. I read that again. To taxpayers up to 12 lakh of income other than special rate income such as capital gains, tax rebate is being provided in addition to the benefit due to slab rate reduction in such a manner that there is no tax payable by them. The total tax benefit of slab rate changes and rebate at different income levels can be illustrated with a few examples. A taxpayer in the new regime with an income of 12 lakh rupees will get a benefit of 80,000 rupees in tax, which is 100% of tax payable as per the existing rates. A person having income of 18 lakh rupees will get a benefit of 70,000 rupees in tax, that is 30% of tax payable as per existing rates. A person with an income of 25 lakh gets a benefit of 1,10,000 rupees, that is 25% of his tax payable as per existing rates. Details of my tax proposals are given in the annexure. As a result of these proposals, Honorable Speaker, sir, revenue of about 1 lakh crore in direct taxes and 2,600 crores in indirect taxes will be foregone. Mr. Speaker, sir, with this, I commend the budget to this august House.
Item number
Finance Minister Nirmala Sitharaman leaving the best for the last. You heard the cheers in Parliament. You've probably not heard the cheers in our newsroom and across our PCR. Everyone whooping because this, as promised, is a budget for the middle class, for the salaried income taxpayer. There is now zero tax up to 12 lakh rupees. New slabs have been put into place as well.
1 lakh rupees.
Continue.
Okay, all right. So let's get those details in first. Pranav Saita, I think this is the moment which everyone was waiting for. We expected it, 10 on 10 for guessing it would happen, even though there was a clue from Prime Minister. But what does it mean, these changes in personal income tax?
I somehow think this just brings about an atmosphere of taxpayer excitement, consumption being permitted, and therefore that was the need of the hour really. This is the time when the finance minister, without giving up too much of taxes, is trying to build the confidence and the taxpayer friendliness kind of environment, plus ensuring that the lost momentum in the economy which we are seeing for the last few months, particularly on the consumption side, is fully addressed.
How significant are the changes in real terms?
I think these are really significant, unlike many of the previous budgets that we've been seeing for decades where there have been tinkering in the tax rates. This one is really done far more gracefully. I think this will have a very significant impact in terms of both consumption as well as the confidence and the feeling of a taxpayer that what he is contributing has really been recognized.
Okay, this is very important. The other big thing that happened aside of taxation is the fiscal consolidation path, Mihir. 4.8% current year, 4.4% next year. So fiscal prudence is the key. We don't have the number of the capex for the next year, but this year's capex the number is lower as well. So a number on of what the fiscal deficit tightening mean per se for markets. The markets came off a little bit. Two, just rolled into that, right? If the base is 10.18 lakh crores for this year, they can mathematically show a 15% growth in capex next year because the receipts number is 10% higher.
Sure. I just got some message saying that the capex number is less than 11 lakhs.
For FY26.
For FY26. So maybe not a 10-15% growth, but probably about 8-9% growth probably, which is a tad below expectations, but nothing to worry about beyond a point. But I think more important is the fact that almost 1 lakh crores of tax incentives in the form of reduced taxes are being given out, which is a decent amount of extra money that the urban consumers can spend.
Well, is Atul Lal disappointed with this? Managing Director, Vice Chairman Dixon with us. Mr. Lal, thanks for joining in. One, of course, more money in the hands of the taxpayer, which is always good. But the capex number, by the math that we seem to be doing, is less than a 6-7% growth on a reduced number of 10.18 lakh crores for FY25. Technically, FY26 number might actually match FY25 or be slightly below as per the earlier estimates. Your initial thoughts?
So undoubtedly, I think reduction and exemption of income tax for the salaried people up to 12 lakhs is a very, very major positive. It's going to trigger a positive sentiment. It's going to trigger demand. And that's what the call of the day was. One wants to congratulate Honorable Finance Minister for this very significant step forward. As far as capex is concerned, yes, there has been a minor reduction, it seems. But please appreciate that Finance Minister is on a fiscal consolidation path. And she's been meeting the targets. That means we are building for the future. We're not taking debt on the government side, which again is a very prudent and a positive step. For electronics industry specifically, I want to thank the Honorable Minister for rationalizing the import duties on IFPD. Is going to trigger domestic manufacturing. She has reduced the import duty on parts of open cell, which specifically for Dixon is going to be a big positive because they're setting up a display module plant. Also, rationalizing the duty structure for lithium-ion batteries is a positive for setting up the manufacturing ecosystem in this particular components. So on the whole, it looks very positive.
Mr. Lal, very good morning. Tamanna here. So many things to unpack. Good afternoon, actually, now. So many things to unpack. The FDI and insurance has been increased. 4.8% is the fiscal deficit target for next year, lower than 4.9%. 4.4% has been penciled in for this year. So complete prudence there. Just on the Make in India push and some custom duties which will benefit you specifically, you spoke about that. The messaging on the Make in India push for manufacturing, is it what you had hoped for? Did you expect more? Should we have seen more?
So Tamanna, undoubtedly the first phase of the government policy framework has ensured that all devices, electronic devices being sold in India are manufactured in India. By the initiatives taken in this budget, particularly of rationalizing the import duties on IFPDs, on open cell parts, on batteries, is further going to deepen the manufacturing. We are also expecting a rollout of the PLI for component industry in the non-semiconductor space. We didn't expect it to be announced in the budget, but we are fairly confident, as per our understanding, that it's going to be rolled out by the government shortly. That is going to create a very deep component ecosystem in a non-semiconductor category, which will help in growing the industry, which presently is almost $150 billion. It has grown manifold in the last 4-5 years to almost $500 billion in the next 4-5 years. So we feel electronics industry is on the right path, and we want to thank the government and the Honorable Minister for this policy framework for triggering this growth.
Just one point from you, Mr. Lal, in terms of the demand push, and I know we spoke about briefly right on top where tax slabs have come down, and the direction seems to be to push demand. Do you see an outlook for improved demand, especially in your segment where demand has already been fairly robust?
So demand was normal. We would like to increase more, because please appreciate the demand for consumer durable goods in very many countries, in our neighboring countries, is almost 5 to 6x what's there in India with a similar population.